All right, let's get this thing started. Welcome back to the channel, Crypto Trend Trader, with your Wednesday midweek market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's up in the chat? How you guys doing today? All right, let's get it rolling. So yeah, lots to look at this week. Um, let's go ahead and start where we always do with that 10-year. Nothing really has happened over here. We basically just bounce in that area. Um, there's really nothing to see. I mean, we've just been going sideways at this point in time for a few weeks straight and have basically moved all the way up. I mean, we started off basically in like overbought areas, and this is completely turning into just a bullish reset. Basically went all the way back down to the bearish control zone, all the way back up to the bullish control zone, and now here we are headed back down. And in the meantime, nothing has happened with price action. We've just went sideways. So when you look at the TJD TDMACD, all we did was basically reset everything down to levels where we can get ready for that pump now. So nothing has really changed in my opinion on this one. Overall, still looks bullish to me. I definitely think we are going to see rates jump up here in the near future. And then if we take a look at the Dxy Dollar Index, I had spoken briefly about this last week. Since our breakdown basically through here and our confirmation, I've expected obviously continuation as we broke through what amounts to would be a bullish pattern, but we've broken down like bearishly from it, in my opinion. So at this point in time, same thing again, everything has cooled off and moved down to the lower levels. But what we're starting to do here is develop like some serious potential for bullish divergence. So on the daily, it's not as evident as we have like original point right here and then one here. And now we're looking at like putting in essentially like a point over here. So this reference point would be in relation to whatever we have on the left. But if we switch over to the weekly, which is where something like this is much more relevant, in my opinion, we now have a very clear, like different picture. So we're essentially down here right now at the bottom of that December low. So our December low was back down here at like 89.9 on the weekly. And here we are now, like at that low, or like, almost like slightly below it. And then if we take a closer look, obviously it's very, very clear on here. That was our low back here. And now we have much, much higher up. So the likelihood of us basically developing some sort of bullish divergence, in my opinion, is extremely likely. So we'll have to wait and see how that works out. But at this point in time, we have an initial point of bullish divergence way up here at 92. And then we have a second point right here that develops our initial bullish divergence, because we obviously have a lower, indicator oscillator point and then a central one here. And now here we are. Essentially what I would expect to happen is us to come down to the red slope line and then bounce that back to the upside. We've now re-entered into the bearish control zone. So now we're in the bearish control zone once again. So we have basically the third same version of the exact same signature coming into effect. So if we take a look at our Stokes here as well, you'll see we have a low on the Stokes right here. We have a higher low on the Stokes right here. And we are still substantially higher right now on the Stokes. Now it is possible that we get continuation, come down here and put in a new low and invalidate that point. But based on like the amount of effort it's already taken to get where we're at, and then how low we are on price action, this looks very likely to be like, essentially going to develop into what is weekly triple bullish divergence on the dollar. And that's going to be, honestly huge. And if we look at, a little closer, our low down here, our central point right here, and then essentially how this would look if it developed, we'll notice there's potential for this to move down here and essentially run into our negative slope line, the red slope line here, at the same time as we run in over here. So, just again, time analysis is one of the hardest things to do, but you'll see this is already starting to like lose its angle and start to kind of level out. So I would expect essentially these points to intersect somewhere around this range. So, where is that at? It's like mid-August. So it could take quite a bit of time still to get down to these levels on the indicator oscillator. But if we even get one more tick on the weekly lower than this tick right here, we're going to have 1.2 2 points, and then a third point of bullish divergence, and then the likelihood at that point in time of that developing into, essentially a powerful move to the upside. And then again, if we look at the Stochs, this is almost the same low right here, but this one is slightly higher. And then again, depending when this gets down here and like how aggressively, it's still a pretty aggressive slope down here at this point in time. So, maybe this is pointing a little closer towards like the end of June. But essentially somewhere in this period, I would expect this to come down here and start to level back out. And then when we get that hard buy, and then potentially a third point of the hard buy. Here when we got it, we were already topping out. Here when we got it, we were slightly topping out, but then we got continuation afterwards. So here what I'm looking for is basically similar situation where we get a powerful move off that, and then essentially we can develop out this pattern a little more clearly. So, and again, this is all hypothetical. This is what could happen. It's not guaranteed to happen. But again, typically when you see bullish divergence between one point and the second point, you'll see some kind of move off of it. But if you can get a third point, and then also like everything's lining up for that potential to play out right now, you typically will get a powerful move from there. So at this point in time, most of this pattern and like the 5-wave structure is basically like completely irrelevant. But I would still expect this to play out into, what's going to look like a long-term bottoming pattern. So we will definitely be keeping an eye on that, obviously, because I take a look at it in every video. So it's not going to happen overnight. We definitely have, a few weeks, months, whatever, till that plays out. But, we'll have to see exactly how that looks in comparison to like, Biden's stimulus plans, spending plans, infrastructure, what Europe does, what Canada does, etc. Is obviously that's the relationship, not between the dollar and assets, but the dollar and other dollars. So it's a, essentially like a currency metric. So, and here we have S&P. We're going to jump in with SPY. Go take a look at our indexes, and we will go from there. So, obviously these things are potentially developing once again, bearish divergence. We'll have to see again how it plays out, but we have obviously a high right here, and then we have you can consider this to be still part of the same move right here, or a second point, depending how this plays out. But now here we are again with a bunch of green histograms in a row, still below the slope line, and we're already back inside the bullish control zone here at essentially the same or a new high. I would expect us to find support and keep getting pushed up by our blue slope line here, but it is possible we do get like, potential sell-off here. But I'm expecting sometime in the next few weeks to months, to start seeing like some bearish divergence start to develop in some of these indexes. So Dow Jones, fairly similar situation here. Again, we have like a high right here, and then we have a higher high with less momentum used on our indicator oscillators. And now here we are potentially putting in a higher high again, which would result in, again, triple bearish divergence on the daily. So we'll have to wait and see how that plays out. I'm not ready to get, it's hard for me to get bearish on pretty much anything right now. Just the way everything is looking right now, the momentum is completely in the direction of the bulls on like pretty much every market, with the exception of cryptocurrency, which obviously has seen like, a heavy sell-off recently. So we'll have to see how that plays out. But as far as traditional markets and anything that's in a powerful uptrend, putting in like all-time highs, it's hard for me to ever get bearish on that. So here we have IXIC, the Nasdaq Index. This thing has basically gotten all the way back up into the bullish zones, but has been unable to put in a new high. We're still running into and bumping our head on that very key resistance here in blue. So again, we'll have to see how this plays out. But typically, if we can get back up here again to the top of the range and top out, it's going to really look like a gigantic triangle to me, which is, an ascending triangle, which is going to be bullish. So, it's once again, the NASDAQ obviously has seen a decent amount of a sell-off, but I don't like to get overly bearish on things like in advance. I typically will wait for them to develop and let them tell me, what's going to happen in the future. So we have this very clear triangle that is forming on like the tech sector. Obviously rates can at any time like just destroy tech. But we have a very clear top here. We have a low. We have that same top here again. And then we have a higher low. So, we're now bouncing very powerfully to the upside, running into some resistance, but we're back on top of our moving averages. very little resistance above our heads. We have basically just these two little peaks above us now. So there's no reason to think we're not going to be able to creep back up to the top of that zone. And now if we look at the index, it's painting a much different picture than some of our like key stocks within that index, which we will get to the tech sector here in a little bit. But I would expect this to essentially just keep playing out like that. And when the time comes, when we do get back up to that top, and if and when we do get that break, we can go ahead and set out a target, not only with our Fibonacci extensions, but also we can do the measure move of the triangle. Now there's two ways you can do the measure move of the triangle. You can do like the aggressive version of it, which is basically the flagpole leading up to the pattern, or you can do like the conservative level, which is basically like, the meat of the actual pattern itself. So the bottom of the pattern here to the top of the pattern here. And if we take a look at that, that's going to lead us up here basically to 16,053 on the Nasdaq. So from where we're at now at like 14, I mean, we're not even at 14,000, but essentially where we're at now to that, we're looking at like 16.5% move to the upside. And then if we take a look at it based on Fibonacci extensions of basically our retrace from the A down to the B of the pattern. So basically we have our red Fibonacci here from the top here to the bottom. So the top of this pattern to the bottom of the pattern, we get our Fibonacci extensions. First target would be the 1.618 at 15,400. Second target is going to be the 2.618, which is way up here at 17,588. So the potential on this trade, now typically I would like to put in like 2 points here and then take a retest trade. So, assuming that we see some kind of weakness come back in the Nasdaq and we get like one more potential off the bottom, I would like to see something like this as a potential entry, like back into the tech sector. We can set a rather conservative stop loss, so like 5%, with like an 18% initial target to the upside, based on the measured move. And then if we do also, we'll go ahead and clone that pattern, and then we'll set up essentially that same trade with a little more aggressive of a target. So if we're taking that aggressive target up to the 2.618, we're looking at like a 30% move. And again, with the 5% stop loss, yeah, you could argue that tech has already had a big run and the reopening trade and blah, blah, blah. Tech's going to underperform. But the truth is, again, based on statistics, I'm going to take a 3.5 to 1 trade. I'm going to take a 5.75 to 1 trade all day, every day on something that looks likely to play out. So, and you can realistically, you could trade this on a breakout. I don't like to breakout trade. I would rather buy off of support on a retest, like down here, and just see like a third higher low. But again, everybody has their own. I don't like breakout trades. I think the majority of the time breakout trades fail. And, I'm notorious, obviously, for my throw over calls. So the last thing I want to do is be the victim of one of my own most likely situations. At this point in time, looking at the Russell, I think it's safe for us to say that we can call this pattern invalidated. This was exactly what we're looking to happen. Basically, a retest to the bottom of the zone. And then, two options here. We either break down from it and we get our head and shoulders plays out, or we consolidate at the top of the range and, continue long enough, it invalidates the symmetry of the pattern, which I would say it very clearly has. At which point in time, we just got to pay attention to, is this going to develop into a Wyckoff distribution pattern? And then we eventually get the breakdown, but we don't see like our typical like textbook head and shoulders, or do we just consolidate here long enough and then just get a continuation to the upside? So, but we are seeing very clearly, we have now crossed over the slope line after all of that bearish divergence has played out, after a long consolidation period at the top of the range. And now here we are re-entering the bullish control zone at what amounts to like basically almost all-time high levels. So let's switch over to the weekly and see what picture the Russell's given us. I'm going to turn off our drawing tools. And, you can see very clearly we found support on the 21. We do still have the parabolic SAR, bearishly above our heads. We did cross underneath the slope line and we're showing only red histograms. So I would say that the Russell right now is painting two very different pictures. On a shorter time frame on the daily, it looks at least somewhat bullish, for a little bit of continuation at least. But if we look at this on the weekly time frame, I would say this looks pretty darn bearish. I think more likely than not what's going to happen here is we're going to see this develop into a Wyckoff distribution pattern, and then we'll see a breakdown at least down to the 50-55. below 2,000. So, you know, once we cross under here, we find some support. We'll have to see what the Stochs do. If the blue comes up and, you know, meets the purple and then gets rejected, it's going to be very clear. But if it comes back up and crosses back into the bullish control zone and we start to get continuation to the upside, you know, I'm going to trade with the trend. I'm going to go with the flow. And, you know, this thing's going to start looking bullish on medium time frames as well. But again, right now, to me, the Russell, not interested. But again, as these markets develop, we're going to see one of two things happen, you know, based on what's happening right now. We're either going to see the markets keep broadening out, which is what's been happening basically. Like everything's been going from very concentrated overperformers into like, you know, just everything that's been underperforming. So basically people are spreading out all their profits into like weak stuff, you know, hoping for essentially like the catch-up trade. Or alternatively, you know, if the market starts to like compress, we'll see less and less stocks are overperforming and more stocks are underperforming. And then we'll see a concentration. And that's where you get like that musical chairs type play, where essentially there's less and less chairs, less and less stocks in the market that people are interested in, and the money keeps concentrating into them. And then eventually, you know, there's only one left, and then boom, the game ends. So again, we'll have to see. I'm not particularly interested in the Russell right now, but it does not mean that this thing can't be, you know, an overperformer in the next like, you know, 2 to 6 months. So let's check out some of our other ones. The ICLN. This one is something that I'm actually very interested in the long term. But right now, you know, the clean energy trade I think is going to be a great trade. But this is still showing like some of the most weakness out of anything. Specifically, this index is. So we'll have to see how this plays out. We basically are in like a bearish consolidation pattern. We have broken down below the 200 simple, but we're still above the 200 exponential. So we could easily just consolidate here for a little bit and then finally get a move to the upside. And this was basically just like, you know, a throw over or a fake break of the bottom, and then we get a move to the upside. Right now, though, I can't get overly bullish on this. I really want to because of this right here. Let's turn off the moving averages now, and then we can get a little clearer of a picture of what I'm paying attention to. We have these two levels that we've been watching for some time now. And, you know, essentially what they are is like a descending resistance. So ignore the blue line up here. But if we have this purple resistance and then we have the red resistance right here, we basically have like more of a macro move and then like a micro move. And essentially what's been happening is we've been putting in consistently lower lows, but we've been beating our head on this level and we got slightly above it, but then failed and got pushed back down below it. We're also now in the bullish control zone, but starting to roll over. But we now have the slope on the TJD TDMACD in our favor. So if we can continue to basically just go sideways here and consolidate, we'll basically just automatically break through these levels. And then we can reset the daily Stochs. And then we can start to get that continuation. And I think we'll hit this measure move. And we're going to see quite a few other stocks and cryptos that we take a look at today that have gotten basically these measure move breakouts, including but not limited to Dogecoin and also a lot of like the cannabis stocks we're going to take a look at. So we're paying close attention to that, as that's always a nice trade. And we're at essentially our level right here for what amounts to basically like a 3-to-1 risk reward to the upside. Or if we look at some of our like, that was our potential if we got down to that level, which we did not. But if we get like to some of these higher like Fibonacci extension levels. So paying close attention to this, not going to get overly excited on it yet. I really would like to see this come back down or at least consolidate in this range for a little bit. And then I'm looking for an entry. But again, that's just me and the way I trade. I don't like drawdown. I would much rather enter a trade at like the most ideal position. That way I'm not ever in drawdown. So I'm not like second guessing my position or like wishing I would have deployed that capital somewhere else. So we are basically in the bearish control zone. We've been down in the bearish control zone for some time. We look like I'm on the weekly now. We look like on the weekly, we have exited the bearish control zone and we're about to get that cross to the upside. Now it is possible we get a slight rejection like this one more time and roll back over, but we're looking very likely to get that break very soon in the future based on the weekly. We're also down below the zero line, which is what I like to see. We do still have, you know, a bunch of reds in a row, but then we showed a green. We're back to a red though. So I don't want to get overly excited. I like to see like 2 weeks of green price action here in like essentially a consolidation with this cross, also the hard buy signal. And then I think we're very likely going to start getting that move back to the upside. We have also basically looking at our 5-wave structure here, you know, wave 1 from the bottom back here in July of 2012, topping out basically in May of 2015, bottoming out. You could pick, you know, basically any one of these points as essentially the bottom of the two. So December 2016 right here. And then from then we basically went parabolic up to our top back here in June of 2021. Since that time, you know, we want to see basically a retest for our 4 higher than the 1. So this one has come down so far. If we measure from the bottom here of the 2 to the top of the 3, we've come down to our 382, which is a bullish retracement. Anywhere from the 382 to the 618 still looks good. And the less we retrace, the more bullish we are. So, you know, essentially we have already met this 4. So by coming down here to at least the 382, you know, we basically have met the 4. So, you know, if we get a slight little pushback down to the downside, it's not going to make me bearish. But, you know, we could very easily push back up from here and start to see that move in the right direction. So paying close attention to this one, this is potentially going to be, you know, one of our entries in the next, I would say probably conservatively, not next week, but the week after. But again, this could easily flip back over green right here. We would have 2 green histograms in a row. We would be leaving the bearish control zone. And, you know, this could be next week's trade. So paying close attention to this one. Also, like fundamentally and technically, I'm like, you know, very bullish on this in the long run. So now let's look at our standard XLE energy sector. XLE looks good. We are on the daily on top of the 200 exponential, 200 simple. We've gotten back above the 377 and the 528. We had a bullish retest of the 528 and found support. And now we're moving back to the upside. We're consolidating at the top of the range, essentially putting in what amounts to another one of our ascending triangles. So, you know, depending on how aggressive we get with this thing, you know, again, we could see this breaking out to the upside very soon. We obviously got our entry back here for the retest to the top, took some profits along the way. So, you know, again, we'd be potentially buying into a breakout here in the future, but we did find support here at that level. We do have, though, a little bearish divergence between these 2 points. And now that we've broken above the previous high, so we have a high here, a higher high, and now a third higher high. We have a high here, we have a lower high, and now we have potentially a third lower high. So while we flip this slope back over and we have multiple green histograms in a row, we look at the knife and it's at like the top of the area right here, top of the range. So we could very easily see what amounts to triple bearish divergence and a breakdown from this point here. So will we get the continuation and hit our next target here to the upside and finish up the 3 up at like $75? Potentially, but we could easily, like by invalidating that potential bearish divergence, but we could easily see this thing just take a dive at any point in time. So bullish on energy in general, but right now, definitely not the area that I like to enter trades from. XLI, so our industrial index basically, you know, this is looking decent without getting too much into the fundamentals of the industrial and the potential infrastructure package and everything like that. You know, we're basically at a very high level. You know, we've had a solid move to the upside, lots of momentum. You know, you could draw a channel a couple different ways on this and potentially see like how this is looking. I don't love any specific way to do it. I think if you went just from these 2 points and then you go to the top of the range, we can have like a pretty nice looking channel like this. You know, where we essentially were like oscillating in the top of it. But what this reminds me a lot of is the John Deere, like the Deere chart. But where this one sold back off and retested support previously, Deere is basically down here doing the same thing right now. And we'll take a look at that one shortly. And then we can kind of see the difference between something like Caterpillar and Deere and then the overall like industrial sector. So, you know, based on this channel right here, and now again, we do only have 2 valid touch points on the bottom. I like to see more than that, but we have so many valid points on top here, it's hard not to respect this. And then we also have regular support along the way on our heart line the whole way up, and then even some resistance here and resistance here as well. So I think you could say pretty confidently that this is what we're looking at. Now, this is our monthly chart, still very strong, still inside the bullish control zone, but we got to pay attention to, we're at like unsustainable levels right now. We're above like the 95 level on this thing, and the last like 1, 2, 3, 4 times we topped out basically right there, and that corresponds also with the top of the channel here as well, and then also like the highest level we've seen on the TJD TDMACD. So likelihood is we're probably going to top out sometime in the very near future on this industrial, at which point in time we could very easily just go sideways, consolidate, stay above the heart line, or even come back down to the bottom of the range. If we did get a sell-off back down to support at this point in time, we're looking at a potential like 32% dump. So, and when this stuff sells off, it sells off pretty hard and pretty fast. So, it could happen in just a couple months. So we'll see how this one plays out. At this point in time, though, definitely not seeing too much long potential here. But in the longer run, extremely bullish on the industrial sector. As essentially, if we get like a, anywhere from a $5 to $10 trillion package over the next 1 to 10 years, whatever it works out to, that's obviously extremely bullish. XLF. So financial sector, again, I have mixed feelings about the financial sector, just because if we do see longer term based on fundamentals, if we see something like a Fed coin, that's basically the Federal Reserve and the Treasury, like basically just saying fuck you to the banks, because the job of the banks right now is to essentially, be the middleman between the Federal Reserve and like, average Joe or businesses or whatever. So we have like the middleman from like the producer to the consumer. So the Fed can take as much stuff off of the balance sheets of the banks as it wants and, make it so they don't need nearly as many reserves, but they can't directly put money into the hands of the people. So if the banks aren't lending, which they are definitely starting to lend more and more lately, I can't speak for everyone, but I'm getting like nonstop offers for loans, refinances, credit cards, all that stuff. Like a lot of like the credit card offers that went away, when things looked risky and uncertain, are now like open back up, and just like the junk mail spam is like, back at all-time highs. So I can't speak for everyone, but I would say that overall the banks are ready to start lending again, even if they haven't started quite yet. So, but if we go straight to something like a Fed coin or whatever, that's basically the Federal Reserve, and that's very possible something that will happen. Janet Yellen gets pissed at the banks because they're not pumping money out into the system fast enough. So she says, hold my beer, and just starts like, she's like the new Jerome Powell, just makes it rain on the consumers by just, pumping out stimmy checks, pumping out money, pumping out loans, whatever, left and right. So, but we'll have to see. We will have to see how that plays out. Again, that's more fundamental look, but technically, very strong, obviously very powerful trend to the upside. We have to pay attention to some of these levels though, as we may see that change in the near future. So, and we can look at longer time frames as well. XLU, so utilities, this is definitely starting to consolidate at the top of the range. Basically looks like a bullish reset taking place right now. We're basically going sideways, slightly down, but we're not selling off violently. And in the meantime, we've completely reset like our indicator oscillators. We got the buy here once, and then it failed. And then we got the sell here again towards the bottom. It's very likely that we could get the buy again. What I'm paying attention to, once again on this is, this is like that similar, just like descending channel taking place where we're basically just, selling off sideways to down, but we're still well above the 200 exponential and simple moving average. Maybe we get down here a little lower, but I don't see any reason why this is not going to continue to go up. And, that's going to also like reinforce like the shorter term, like, inflation, argument. So, and then one more, and then I'm going to take a short break here. U.S. oil is next. U.S. oil, while we're not near our all-time highs on this thing quite yet, God, I hate when we get a giant wick like that. It makes the chart like unbearable, but we're still well below like that $145 a barrel, that we saw in the past. But if we look at this on like the monthly, we're in a very powerful uptrend. We're well above the 200 exponential, but we are bumping our head on the 200 simple. Again, bullish control zone, just flipped over the parabolic SAR. Very clear uptrend on the monthly. Switching back over to the daily though, we got to pay attention, because if we are going to top out temporarily, where's a good place to top out? Probably hitting our head on the 200 simple. So we'll pay attention to that. But we are in a bullish uptrend based on the TJD, TDMACD inside of the bullish control zone. I do not like to see a hard buy signal at the top of the range like that. But last time that happened, we got the hard buy signal immediately at the top of the range, and we saw quite a bit of follow through. So I don't think it's unlikely that we could see another like 30 to 50% move up on crude. So, but we'll have to see. I'm going to grab a drink real quick, take a quick break. I'll jump back in chat and interact with you guys for a sec, and then we can continue running down the line, knocking out these assets, and of course, knocking it out of the park like we always do. Oh yeah, hit the spot. How we doing in the chat today, guys? Good to see you all. Bubblies with the popcorn, you know it. I'm doing well, man. I cannot complain. I'm in an extremely good mood today for a bunch of different reasons. Some having to do with obviously our phenomenal performance of our portfolio, especially on some of our trades over the last couple of weeks. Our Kits, aka K Ritz, in the house. Good evening, my dude. Looking forward to you as well, man. Appreciate you guys. Sean CZ, good to see you, my man. Good to see you. New pathway. What is that? Z and then surfing. Good to see you, brother. Always. Good day in the market. Yeah, man. It's been a really good day and a lot of different things in the market. A lot of different things. As Sean says, my fiance. He has how many more tabs to go through? Yeah, right, dude. These are the tabs that never end. They just go on and on, my friends. At least I talk fast. And then Kay says, good to see you, Kay. Got to check out PMGT to USD. It's up like 8,000% in 24 hours. Yeah. Oh, that's ridiculous. Yeah. I hope you were invested in it, my dude. I honestly, what is PMGT? I can't even think off the top of my head what it is. I was laughing at AMC because I'm like, man, I hope like when I say stuff like AMC and GameStop and Dogecoin, I hope when I tell people that they're like pieces of shit, that they're not like, oh, I'm not going to take a trade because he said they're pieces of shit. Because like, I think it went up like 100% today. Doge had like a nice move today. I had a nice trade on Doge. We'll go over that one too. Very clear break, and we hit our measure move target on that. So, but yeah, good to see you guys. Good to see you guys. Let's keep ripping if everybody's ready. But honestly, man, when something goes up like 8,000%, it's like there's not even like technical analysis to be done on stuff like that. It's usually some ridiculous like Reddit pump or whatever, which I'm not against. I mean, if you're all about that social media Reddit pump life, by all means, like, do you. I'm not going to be mad at you. Shit, I want y'all to make, money on that stuff. But the way I trade, I can't really participate in those type of like ridiculous ass like pump and dumps. Which, you could argue that it's not even a pump and dump. Something like AMC is just like a pump. But it is crazy though, because to tell you the truth, like traditionally something pumps like that, they come out and issue a bunch of shares, which makes sense. That's what I would do. If I was at some ridiculous asset valuation, I would totally do that. Like dilute stockholders' value by issuing a bunch of extra shares at some ridiculous level. That's exactly what I would do. But typically, the market responds with like a bearish, like violent sell-off, because you're basically like, you're screwing over everybody that's like already invested, including yourself, obviously, because assuming you obviously own a bunch of the stock that you're like the CEO of or whatever. So, but that is not what we saw with AMC. But again, what I do is technical analysis typically with some long-term fundamental analysis. What happens in these things is the magic of the internet and social media. It has absolutely nothing to do with technicals and fundamentals. So, I can't really, your guess, I feel like somebody that's on Reddit all day or in one of these pump and dump groups has a way better chance of making money off something like that than someone like I do. Because I'm always going to sit back and say, dude, fundamentally, I don't want to get stuck in AMC holding the bag. Because let's be real. Short term, AMC can pump a ton. Long term, maybe it can do well. But the truth is, like, movie theaters are dying or dead. Like, GameStops are dying or dead. Like, Dogecoin is, I don't even know. Dogecoin is just Dogecoin. So the truth is, man, anybody that can make money on any of those things, I don't have any advantage over somebody else. Matter of fact, they have more advantage than me because I don't even have like social media. I don't have Reddit. I don't have any of that junk. So by all means, you know what I mean? Do you on that stuff? Come hang out with me for the technical stuff. So, but yeah, just a reminder to anybody that's just showing up. I am not your financial advisor. This is not financial advice. These markets are extremely volatile. Please do your own research. Trade responsibly. Oh, Perth Mint Gold token? Is that really what it is? I don't even know. I've never even heard of that. What is it, a gold-backed like cryptocurrency? That doesn't even make any sense. I wonder if you could have bought it when it was cheap or if it was like one of those things where you couldn't actually purchase it and then they just bought like a ton of gold and it's like a gold-backed stable coin. I really don't know. Because it might be the thing where the chart looks crazy, but it wasn't really like, it's just based on however much money flowed into that like gold-backed crypto. Must be from here. Is that where you're at? Australia? Bubblies? We have a Perth Mint that sells physical metals like gold and silver. Yeah, that's Perth Mint. I have like a quite a bit of gold from the Perth Mint. But that's got to be what it is. It has to be like a crypto that's backed with that. Yeah, that makes sense. Yeah, we can take a look at it. What is it? PMGT? PMGT? But I mean, I suspect that if you probably went and looked at it, I suspect it's probably brand new. And then if you probably went and looked at it, that it would be based on how much gold like flowed into it. But again, I don't know. It might not even be a stable coin. I just imagine it's one of those, gold-backed cryptocurrencies or whatever. Oh yeah, that's so ridiculous. I don't know. It looks like what? On the monthly, it's been around for a while, huh? But again, I would have to see like some kind of inflows to the actual fund. That's so ridiculous. Yeah, what? It was 97 cents. It was like $1. And then it went down to a penny. Yeah, okay. I guess it probably can't be like physically backed if it dropped that much. Unless somebody like raided the vault. Let's look at it. That's so ridiculous. Yeah, it was at what, 5 cents? It was at 6 cents today, and now it's at $4, but it went up to $32. That's ridiculous. Hey, I mean, look, we're in the bearish control zone. I don't know about that knife though. That does not look promising for continuation to the upside. That's funny. Yeah, I don't know. I mean, it's not like we can do any kind of technical analysis or anything on that, but it's definitely entertaining for sure. Okay, so let's check out gold next. So yeah, gold is, we haven't seen much price action out of gold or silver we are at the top of the bullish control zone. We're getting the hard sell, cross, you know, a bunch of reds in a row right here. I do still expect this to keep pushing up. I really do think we're going to make it to 1950, and then we're going to see like that triple top. You guys, you know, if you were here for the last session, I spoke about this specifically and what I'm expecting to happen. You know, we topped out right here with that blow off top back in August of 2011, and then we saw a top, a top, a top. We basically triple topped at that red resistance here, like the dotted red resistance. And then here we saw the top, came down and found support at that red resistance, came back up, and then we saw a double top right here at the yellow resistance line here, came down below our bottom here, found support at the 89, and now here we are headed back to the top to potentially get that 1, 2, 3 tops again at the yellow resistance line. So, you know, again, we'll have to see. You know, I can't guarantee it, but based on exactly what happened, you know, when we sold off right here, we came down, bounced the 55 initially, the 50 and 55, the green moving average right here, and then we came back down and hit the 89, and then we came back up for our third test of the top, and here we bounced the 50, 55 perfectly, came back in, put in our second top, came back down to the 89, and now here we are headed straight back up to put in that triple top. So, I mean, look, let's be real. If there's one market that we know is manipulated or controlled or, you know, whatever by like central banks, it's a huge market, so it's hard to move. It moves like clockwork and is very, very consistent. We know it's the gold market. So in all reality, I would expect, based on that exact pattern playing out, that the exact same thing is going to happen again. Now, if we do break through this level and start to find support or whatever, I will 100% admit that I was wrong. But I think the likelihood right now is that no one else is paying attention to what happened back here and the micro moves inside of this pattern, because it happened, you know, a decade ago. It was 10 years ago. And everybody's super bullish on gold. Everybody's so sure it's going to break to the upside. You know, where was all the gold bulls back here when we were putting in the inverted head and shoulders and breaking through key resistance? That's where I was bullish at gold. I'm not going to get bullish on gold right here. And I have, you know, one very clear reason why not. So long term, I'm extremely bullish on gold, and I can afford to be wrong because I own a bunch of gold and gold mining stocks. So XAG, that ZAG, I'm going to switch this back actually off the weekly to the daily, because sometimes I psych myself out when I don't reset them. So silver, you know, we're up here at that level. You know, we basically have a top right here, a second top. We've got basically our third top right here. This is a bullish pattern. You know, you can't really argue that it's not. We were basically in a sideways channel, and in all reality, you know, all we did was basically just come back up for that retest again. So, you know, at this point in time, we basically have our tops, you know, which depending on how you want to look at it, by closes or wicks, and then we came back down here again, and now here we are back at the top again. So, you know, this is obviously an ascending channel. Ascending triangle, and most likely thing that's going to happen is silver's going to break to the upside. You know, it's got obviously a lot of momentum behind it. You know, there's another obviously like Reddit movement or a same Reddit movement, whatever, behind this, you know, silver squeeze. Measure move is going to take us up to like 36.50. So if that happens, I will be extremely happy, obviously. But, you know, we'll have to wait and see. Obviously, the gold silver chart is telling us a different story, though. And again, oh man, very refreshing. Again, I am paying attention to basically what took place the last time, you know, we had a similar situation like this. Gold silver chart, we came up here on that parabolic ridiculous high back in 2008, and that reminds me of this ridiculous parabolic high in March when basically everybody was scared as hell and gold silver ratio went to a new all-time high. And then if we look at, you know, what happened afterwards, we had like an initial sell-off, a bounce from that sell-off, and then a more violent sell-off to the downside. We have an initial sell-off, and then, you know, I would argue that we're about to get that bounce next, and then again a more violent sell-off. But obviously we'll have to wait and see. You know, but if you look at this as essentially a descending resistance, once we broke through that, we moved up to the 50% range, and then we sold off violently to the 3.618 Fibonacci extension. So here, if we break through right here and we get the breakout of our two descending patterns right here, the bullish move takes us up potentially to the 0.5. That's where I have my target here at like 89 for 89 pieces of silver per piece de la gold. At which point in time, I would expect to sell off at least to, our internal retracement of the 886 or Fibonacci extension of the 2.618. It is possible we could come down to the 3.618, in which case that would be like silver to gold ratio at like historic, like biblical levels of like, like 23 to 1. I think like in the Bible, it's like 10 to 1, like Roman times, stuff like that. So, maybe we see like a ridiculous move down here and we do make it to like the 1.618 of the green pattern. Very possible, especially with like the overall outlook of like silver and its potential, not only as money or a store of value, but also for like, all this green energy stuff, infrastructure, like, all that good stuff. So, but again, you guys know I'm extremely bullish on silver in the long run. But based on technicals, this chart tells me that we're going to consolidate here for a little bit, reset potentially, find support on our breakout of these zones, and then see that measure move up to that range. So right now, honestly, especially with the premiums on silver right now and the like over exuberance in the silver markets right now, and the fact that I have tons of silver, I'm buying gold and platinum. I'm not buying silver right now. I could never live with myself, honestly, buying silver at record high premiums at like, 30-year highs in price action, and then be, the premiums on like Eagles are like over like 25 to 33%. It's just ridiculous. USAS, Gold and Silver Corp. This was one of our trades from a couple weeks ago. Very clearly broke down from our channel. Got a nice measured move breakdown. We are now at that, support levels, key areas of our overall triangle pattern. We're down here at support right now. Maybe we break down from here and we got to eat a little stop loss to the face. But overall, we're in the bullish or bearish control zone, getting ready to exit, getting ready to potentially cross and get the hard buy signal. We have a bunch of green histograms in a row, and we're able to reclaim that support based on like the weekly and the monthly. I really think there's some serious potential for like 71% move in the short term without even breaking out of this pattern. So we'll have to see. XPT, that fatty platty, that platinum. We've talked about this one a tons of times. Nothing has really changed here. We're at the bottom of our blue channel. We're at the bottom of our yellow channel. We're at our entry point for a potential move, 10% to the upside. Or if we go back to the heartline of the channel, 18%. Or if we go back to the top of the main channel, 37%. Very undervalued in relation to gold. And then also in relation to palladium. Palladium is at like over 2 G's right now. It's like double platinum. And the truth is, like, for 95% of applications, platinum and palladium are like interchangeable. And platinum is actually more versatile in the sense that it's usable in diesel engines as well as gasoline engines. Therefore, it should actually be priced higher. And like statistically, based on historical reference, like gold and platinum trade at like a 1-to-1 ratio. So we could get the breakdown. We could see a measure move breakdown of this small channel, takes us down as low as $1,000. We could see the big boy channel breakdown, takes us down as low as $860. I think it's less likely. I think more likely than not, we would find support around that $1,000 level, because it's the top of the one, and also because $1,000 is like a nice big juicy round number. But we'll have to see. On the daily, this looks good for a bounce right here, and looks like we've basically like carved out a bottom. But again, if we switch to a little longer of a time frame, just for like reference to try to see where we're at, I don't love how this looks right here. We're basically about to cross or crossing below our slope line, about to potentially lose the blue slope to the upside. We got the hard sell signal here, left the bullish control zone, and we're very clearly in like a downward consolidation pattern. Excuse me, I got a call for a sec. Let me clear my throat. All right, and then let's flip on our moving averages real quick. Looking like we're potentially about to lose the 21 here. Get the 821 cross the downside. We've still got the 377 and the 528 and then the 200s down here. So again, you know, very easily could come back down for a retest, a nice bullish retest on the weekly at like $1,000, and then see some massive continuation. And then finally, if we look at it on the monthly, you know, still in a powerful uptrend. We are inside the bullish control zone, but, you know, we're starting to lose a little bit of that strength going sideways here for too long. So again, I wouldn't mind seeing this come down at least to like 1130 to like $1,000, finding support. But if we look at this chart, I mean, realistically on the monthly, we got our 821 cross like back here at $1,600. And here we got our 821 cross back to the upside at like $900. So, you know, the upside at this point in time is like exponentially more likely, I think, than the downside. But again, you know, I don't really like drawdown. I'd much rather wait for a little better of an entry. But, you know, you could argue that this is already a great entry. We're at a very key support level that has proven itself many times along the way. So, you know, we'll wait and see. But if I get like the itchy trigger finger, I might buy a little more platinum. A little bit more of that platinum. Plus, it's pretty. Tilray. Oh, man. This bad boy. Wow. These cannabis stocks. Did we get the bottom on these things or what, guys? We have nailed it. Tilray found that perfect support off the 200 simple moving average. Finally busted through our 200 exponential. We're getting the 821 cross back to the upside. I expect resistance at $21.32. I expect resistance again at $28.76, at which point in time, I think we're going to get another parabolic move like that. And people that did not get into these cannabis stocks are going to be kicking themselves. These things have been going like down and sideways for so long, and they're so far below their targets here. These things are looking juicy. So, you know, obviously, you know, you already missed a trade, so I wouldn't worry about it now. But no, I'm just kidding. There's so much potential upside here. 600% for our first target, 1,800% for our second target, and 8,000% for our next target. Or no, wait, that was the one you showed me. 6,737%. So it sounds unrealistic, but we did just see that Perth Mint token go 8,000% in a day. So even if this takes a year, guys, I'm okay with 6,700%. But in all reality, you know, does Tilray ever get to $1,000? Probably not. But I mean, if it does, we'll all be retired, living on an island, you know, smoking fat cigars and drinking rum. Shit, we could buy our own island, guys. But in all reality, we've got that 1, 2, 3. This is our 4. Almost a perfect test of the 1 right here. Could we still see a sell back off here and actually put in a lower low? We definitely could. And I will probably take some profits along the way just because I'm not greedy. If we start seeing weakness, if it starts rolling over, but I don't see it happening. We've crossed over a bunch of green histograms. We've got the blue slope line just showing up for the first time since the last time was back here at the bottom of the 2. So we basically carved out the bottom of the 2, flipped the slope over right here, came out of the bearish control zone, got the absolutely most beautiful signal ever, guys. That buy, sell, buy, that divergence signal at the bottom of the trend, followed by, what was our percentage move up here? Followed by a nice 1,300%. So, you know, it is okay to make thousands of percents on trades. 1,300% for that one. So do we grind out the bottom right here and then get another burst to the upside? I sure hope so. We broke out of our descending wedge right here. And then, you know, obviously, you know, depending how you do the measure move of the wedge, if we just take it like this, you know, that's giving us basically a retest of our orange Fibonacci level up here at like 2632. And that's a nice percentage move to the upside. Definitely potential area to take profits for a high and then a lower high and then potentially another lower high. But again, we'll have to wait and see. You know, I'm looking at this more as like the long game on these cannabis stocks. I think especially the Canadian cannabis stocks have like, I think they've got a good like 3 to 5 years before there's even potential of like, you know, a U.S. cannabis stock being like legally able to be listed. So ACB, man, did this play out absolutely beautiful as well, gentlemen, and potentially ladies. We were talking about that left shoulder, that sweet, sweet neckline, the head, the left shoulder, We were talking about it way back here and how this reminded me of our gold chart, the one we just took a look at. And now here we are grinding out that right shoulder once again, taking that beautiful, beautiful entry point down here at like the $7 range. Back above the 200 simple, about to bump our head on the 200 exponential. I do expect some resistance up here at like 10.92, 11 bucks, which will be like half of our trade back to the upside. That'll be our neckline trade of 151%. So, you know, can't be mad about that. I will take some profits off the table up here, obviously, like I always do. But realistically, the measure move will be from the head to the neckline. And, you know, that's going to give us our measure move for our trade number 2, which will be a 359% gain. Let's go. 20 to 1. Let's do it. We'll run into some resistance here at the 377 and the 528, you know, but again, once we punch through those, I expect that measure move to play out. And then in all reality, you know, this is lagging behind like Tilray a little bit. It looks a little more bearish than some of our other stuff. But again, let's turn off our drawing tool and take a look at the moving averages. We crossed this thing bearish back here at 97 bucks on like that 821 sell-off. And then here we were able to cross it back at like 9 bucks, but then we lost it. And now here we crossed it again at 9 bucks. So in all reality, you know, it lost 90% of its value down to here. So in order to get back, if we just get back to the same level of the cross, that's 945%. If we look at the weekly 200 exponential, we're talking about 30 bucks. If we look at the monthly or weekly 200 simple, we're talking about 50 bucks. I don't love this chart just because, well, you guys know the reverse merger and all that junk. But there's definitely some serious potential. Here on the monthly, we have a low, we have a high, we have a very clear higher low on the monthly. We have the bearish control zone. We have a hard buy signal. We have a consolidation. We're about to burst through that 8 moving average. We have all green histograms in a row since we've been carving out this bottom. I mean, just a retest to the 21 once again takes us back up exactly to the neckline of the head and shoulders, 20 bucks. So even if you didn't get into this one at 10 bucks, still got a 100% move to the upside. And, you know, based on the size of the move here, we did it in 1 month back here. We did it in 1 month back here. So are we going to do it in 1 month here again? 1 month from now, is our cannabis ACB position going to have doubled from where we're at currently? I think so. I think so. I'm literally willing to bet on it by taking a position in ACB. So, yeah, looking good, looking good. Obviously, these are our trades basically from like last week / the week before. You know, and it's nice to recap on these and see. And, you know, if you didn't get the entry back here at 7 bucks, you know, yeah, maybe you missed out on a 50% gain. Well, I mean, actually, you did miss out on a 50% gain, but it's never too late. You know, we consolidate here for a little bit. I think we're going to see that powerful move back to the upside. So, this is the type of thing, too, where, to tell you the truth, I'm going to continue to buy into strength here. I'm going to take another position through here. I will probably take another position as we break through the 200 exponential. And then as we break through the head and shoulders, I will keep buying this on the way up as well. So this is sort of like counterintuitive to my not taking breakout trades. But this thing, it's not like a breakout to a new all-time high. It's a breakout of a pattern after a very, very long, like multi-year consolidation in a fundamentally and technically bullish base. So YOLO, one of our ETFs in the cannabis space as well. Again, very similar to our Tilray position right here. We have this descending wedge right here. It's getting tighter and tighter and tighter. And we all know how that goes. Eventually, you break through it. Measure move to the upside is going to be our measure move of the actual pattern itself. Very conservative. Take us up to like 25 bucks. We're at like 21.40 right now. Again, this position is already up very nicely. We're up like 10% already, expecting this to take us at least up to like that 32%. How long is this going to take? I mean, probably a couple weeks, I would say. We do have to pay attention, though. Are we going to just put in another lower high, or are we going to get that legitimate breakout to the upside? But, you know, again, we'll have to wait and see. I always encourage taking profits along the way. But remember, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. A bunch of green histograms. We're above the slope line. We got the hard buy signal coming out of the bearish control zone. This looks good for continuation and obviously excites me. THCX. one more cannabis. We have broken through this basically like descending resistance. We're now, getting ready to put in. We don't have as clear of a measure move, but again, we could get something going on like this. There's not a, like I said, as clear of a like support here at the bottom. But in all reality, key fib levels, we took can't beat that entry point. And then our potential upside targets based on Fibonacci extension levels, 222% up to $50 or 569% if we get up to a hundy, that even hundo, that bill, that knot, that balloon. UEC is next. A little bit of uranium. Talking about that cake, gentlemen. If cake doesn't excite you, I don't know what does. We got that 1, the 2, the 3 consolidation at the top of the range. Look, I'm massively bullish on uranium, but we got to really pay attention to this, and see what's really going to happen right here. Are we going to end up breaking through this and getting continuation to the upside? Definitely a possibility. Massively bullish on this long term, but the more people that get bullish on commodities is like good short term, but I almost feel like this trade is just getting like a little too crowded because like no one talks about commodities for like 10 and 20 years, and now everybody and their mom is like, this is a commodity bull market. And I'm like, did you just Google commodities? Like I've never even heard you talk about a commodity for the last decade. So a short-term pullback, I think definitely a possibility, but there's so much potential in these things. I'm already in obviously a position, on this from back here on the 2, back at $1. And then I have another entry at $2, on the breakthrough and retest. And then I think I took another position. No, I don't think I bought any more around $3. Somehow I think I have some entries at like 270. I don't know what that was. Maybe this retest right here. But again, I'm just buying the pullbacks on this. I think if we break through this though, this could just go parabolic. But I really wouldn't mind seeing a little bit of a pullback right here. Some kind of consolidation. Potential better entry again around $2 and then see some continuation. We'll have to see though. Again, there's nothing wrong with buying into strength. And that's an absolute fact. I would rather buy into strength than buy into weakness. And try to pick every single bottom. If I'm buying a bottom or a breakout, I'm buying it because you showed me something. You know what I'm saying? You flashed me that thumbs up, if you know what I mean. URA, another uranium ETF. We broke through a key Fibonacci level here. Let's go to a longer time frame. We broke through a key Fibonacci right here at that 382, consolidate above the 89 right here. I don't see any reason why this isn't going to get continuation to the upside. $30 our next target, another 50% move. After that, $44 would be the 618, at which point in time, either the 0.5 or the 618, I think more likely than not would be a temporary top on this thing. We are inside the bullish control zone. We are very powerfully moving to the upside. Ton of green histograms. Beautiful blue slope line on the monthly. Well below the previous highs on this bad boy back in 2011. Again, a decade ago, this was like introduced / topping out. So think about the amount of pain people have suffered. $130 down to like, even if you don't count the wick, down to $8. It's an immense amount of pain in the uranium market. Like there's people that got burned so badly by uranium, like they can't even sleep at night. So I think in all reality, we'll just take the other side of that trade. Instead of riding it on the way down, we're going to ride it on the way up. Sort of like that bull, you know what I mean? Try to buck you off. But we got the 821 cross for the first time, basically in a downtrend forever. Crossed the 821 back here. So what are we going to get a 10-year uptrend on uranium? 20-year uptrend on uranium? Probably. We're already up a nice percentage off our initial entry, but I'm probably going to take another position. Matter of fact, I am going to take another position on this. I will look at the shorter time frame chart. We are getting a hard buy here. We did bounce the slope line right here. Multiple green histograms in a row. I might even pick up a little more of this tomorrow. Basically at our cycle high right now, confirming a breakout above a key Fibonacci level. I honestly have been struggling this week to find something that looks like super juicy that I want to dip my toes in. And you guys might not like my pick. So we'll get there in a minute, but it'll be proof that, you know, when I change my mind about something, I change my mind about it, and I'm okay with that. Like, I'll talk trash about something as long as I want, but when the technicals show me something different, I'm going to tell you guys the truth. I'm not just going to say, I hate you because you're mean, and I'll never forgive you because you're a bad chart. CPER, copper, again, very, very bullish on copper. We are at the heart line, at resistance, inside of a long uptrend. You know, again, copper trade is very popular, very crowded. One reason I don't like this right now, I mean, I do like it. I like it long term, but short term, I do not like it. This is a giant W pattern to me, which is great. W patterns are awesome, extremely bullish. But, you know, we have a very clear top of the pointy little thing in the middle of the W. You know what I'm saying? We got that V, we got that V, we got the breakout, the measure move from the bottom of the W to the top of the V, you know, basically is where we're at right now. So we're back at basically the top after a measure move, after a parabolic uptrend. So, you know, the likelihood of us basically like topping out here for a little bit and then getting like a retest. Now, are we going to get the retest all the way back down here to $21? I don't know. Maybe that's a little greedy. Maybe I'm a little ambitious on that one, but I'm going to wait it out. I'm going to look for a better entry on this. But that doesn't mean that I won't be back here in a couple weeks saying, look, we broke through, consolidated, and now I'm going to take the breakout trade of, you know, the blue sky breakout. Very powerful uptrend, bunch of green histograms, you know, with some nice, healthy consolidation red histograms here in the bullish control zone, you know, putting in nice, nice patterns right here. We're putting in like a high, a higher high, a higher high, high, higher high, higher high. So basically our charts and our oscillators are telling us the same thing. We're not seeing any divergence, just straight like convergence between everything. That's what we want to see. But now here we are potentially on the Stokes here. We have our high right here. So we have a high, then we have a higher high, and now we're starting to roll over here. We could easily bounce this back up. Maybe we put in, you know, like a descending, like broadening wedge, a little divergence. Maybe we get a little sell-off, but I'm going to wait and see. But potential that we're topping out right here, and then we get a pullback to the 236. I'll probably take an entry off of that $24 range. And then if we get the pullback to the 382, that's like, to me, the juiciest buy we'll get. And I will 100% be taking that entry as well. Matter of fact, just for reference in the future, we can put a little box in right here because that's, again, going to be a very key level I'll be paying attention to for a potential buy. And in all reality, I'm just going to move this down the line a little because the likelihood is we would maybe get something like that and then a pullback there. But will it happen? I don't know. Will I buy into strength on copper? 100%. I'm extremely, extremely bullish on copper, but I'm bullish on copper long term. You know, short term, I don't love how it looks right now. I mean, I do. I like how it looks right now, but I think there's potential for a pullback. Lithium, I don't think we've looked at this one recently. Again, this is another one of those metals that I'm extremely bullish on. Lithium, nickel, platinum, copper, gold, silver, pretty much if it's made out of metal and it's in like, clean energy like EV sector, or you like make pipes or, wires, stuff like that out of it. Like, I'm extremely bullish on it. So, and, a lot of this stuff is in very limited supply and takes a long time to ramp up production. So if there's a sudden surge in demand, like there is currently for copper, for something like lithium or platinum, it's going to take forever for more production to come back online or come online initially. So these things will just literally moon. Very refreshing. So lithium looks absolutely beautiful right now. This is just a ETF, like battery lithium ETF. Let's do a Fibonacci extension and take a look at some of these targets here. So we're going to take from the top of that wave in 2011, and we're going to position the bottom on that ridiculous wick down here in 2015. And you'll notice that we found pretty solid support here with the wick, depending on what time frame you're on, at like that 236, initially at the 382, and then broke down to the 236. Since then, we took out the high, which was at the 886. So we can very clearly see, support at these key levels. So it's very clear that we're not the only person using this tool here. Now here we are at the 1.382, topping out, retracing back to our key moving average and seeing like continuation. So if we break through this 1.382 level, and obviously bullish control zone, getting ready to potentially bounce that 80 level here, all green histograms. Where do we expect our target to take us to? 1.618. Where's that at? $100. Where are we at now? $68. Another 50% move to the upside. So I really like how this looks. Also, if we look at our monthly close, we closed our monthly exactly at that previous monthly with a very bullish looking candle. Nice wick on the bottom, rejection of lower prices, nice solid green candle, and then a slight gap up. So, next couple months, I think we're looking at like a 50% move on this bad boy. So again, we'll see how this one plays out. I like this. Even if we look at it like 50% move there, and then if we get a potential breakdown below like the 1.236, lose that as support. Excuse me. That's still giving us like what? Not quite 50, 43% to the upside, 10% to the downside. So over a 4-to-1 risk reward ratio on what amounts to a blue sky breakout on this. I like it. Looks juicy. Let me make this guy a little slimmer. Let's switch down to a shorter time frame and see how it looks as well. Extremely bullish on longer time frame. All right, this is what has me thinking though that we could potentially be putting in, like a double top or breaking out and then topping at this target, followed by like a longer consolidation or sell-off. We do have a hard buy right here. Got the cross to the upside. That's obviously good. Couple green histograms in a row. We are potentially going to save this slope line, but it looks like it's about to roll over. So typically what happens is if this flips red and we bump our head on it, we're going to get rejected. So, want to pay close attention to this on the weekly and see how it develops. And then if we go over to the daily, it looks nice and juicy in the bullish control zone. Got the hard buy coming off these levels. We didn't get the test of the 200 exponential and simple, which I would have rather see, because that would be like more of the market like basically agreeing on that as a like hard floor for now. But we do have a bunch of green histograms in a row. Got that blue slope line. Looks good. I think realistically, there's more bullish looking things and a nice shade setup than there is like bearish looking. So again, this may be one of the ones I enter another position on. I do already have a position in this, but it's from a while ago. And I would definitely be, I may end up adding to this position this week. So we'll put this one on the list of stuff that I might be buying. Caterpillar is next. That cat-a-tat-tat. Okay, and then we can kind of look at this and then look at it in comparison to deer. And then remember, we looked at like the industrial sector already. We're in a very clear channel, or you could say ascending wedge. We're basically just hanging out at the bottom of the channel. What I don't like about this is, we put in a pretty strong bounce and created that point, put in a pretty strong bounce and created our support level. Pretty strong bounce here, pretty strong bounce here. Here, we bounced it like a little ahead of time off that key fib level, and then now we're just kind of getting pushed up by it. We're not seeing like that rejection bounce that we would like to see. I am still in that position off of here, but I think it probably plays out. I think we probably get the remainder of the move to the upside, but as we run out of space in this wedge, as it gets tighter and tighter, I think it's more and more likely that we get like an elongated sell-off here. And then we also have, we've been talking about this for a while, we have a very clear, high right in here, and then a higher high right here. We have a very clear high on our indicator oscillators here, and lower high right here. Now we're potentially, going to put in a new high, get that measure move up here, or that breakout above the key fib level, and then have like, 3 drives of bearish divergence on the daily. So paying attention to CAT to potentially be topping out for now. But let's look also at the previous times this happened. Very powerful uptrend, consolidation sell-off. Very powerful uptrend. We got basically a nice, like, whatever you want to say. We got a breakout or a throw over, whichever way you want to look at it. But, went parabolic here and then sold off pretty violently after that. But look how long it took us to consolidate. Like, our move was month after month after month, and then our consolidation was month after month after month. So our move has been month after month after month. So I'm just really not interested in getting caught in a position at these high levels, like for what could amount to a year or two. So, I mean, it is what it is. It looks very powerful on the monthly, still strong for now, but not looking like the type of thing where I'm looking to enter into, more positions. But that's just me. Obviously not financial advice. John Deere, that deer looks much weaker, much weaker. We have that same, this looks, actually, I want to go the other way. I want to go no moving averages, but keep our drawing tool. We have a very clear channel. We've been oscillating in the majority of the time. I mean, 95% of the time we've been above the heart line in this channel. And now here we are, basically at the bottom of the range. And this is a tough one to draw because you're basically looking at the resistance as a very clear trend line. And then you're looking at the heart line as a very clear trend line. But we have almost no touches on the bottom. We have the initial one that gives us that point, and then we're basically at that point again. So I would expect us to bounce this, but I'm real skeptical the way this looks right now, that this potentially could be the top, and we see the measure move breakdown of the channel. It's either the 236 or the 382. Again, I don't want to get caught in this thing at these prices, but based on indicator oscillators on the daily, we're in the bearish control zone, potentially looking, exiting it, potentially looking to get this cross. Potentially looking to get this cross back to the upside. Couple green histograms in a row showing a little weakness. We're below the zero line. Still a pretty powerful red slope. So do we kind of consolidate here for a little bit and then get a push back up? I think there's probably a short-term trade here, for 10% to the upside. And if we lose this level, it doesn't look good. But I definitely think there's something here. But it's not beautiful. Let's say we took a 4% stop loss and we broke down from, these key levels. Or even if we got a little less greedy and took basically taking, damn it, if we invalidate this low down here, but I would rather take it like this off a wick and get out of the trade than I would have to take a stop loss all the way down to 330. So here we can have a very conservative, position, 3% to the downside risk, 11 or 12% to the upside reward. So 4-to-1 risk reward ratio just for a retest of that key Fibonacci level. I don't mind that, or of that double top rather. But we do got to be careful with this one. These things are looking like they could potentially be topping out for a 25 to 50% retracement. So I'm going to jump back in the chat right here. And then what do you guys want to do next? You want to do crypto or you want to do tech? I'm open for whatever. It was 1,800 on KuCoin yesterday. Wicked up to 800K. No way I would have bought that random as fuck. What are you guys talking about right now? That same one again? PMGT? What do you guys think? Any preference? Cryptos or tech? Going once? Crypto it is. Appreciate the consideration, Adam. Or is that Adam you? Yeah, perfect. Okay, we'll do cryptos. I don't mind. I mean, I feel like most of you guys watch through most of the videos. If you're here live, it's really for the people who watch later that tend to skip around more, I think. So Bitcoin futures chart. This is, look, I know people are saying this is that bottom, whatever. I'm still very skeptical on the way crypto looks right here. I really think, we had called out obviously the divergence and the head and shoulders pattern up here. I think it's really starting to look like we're potentially going to get a larger version head and shoulders. And you notice too that all of a sudden people are talking about that 2013 bull market in Bitcoin, the one I've been talking about forever, where we basically had 2 parabolic runs. we have the initial run, then we have like a 6-month consolidation, then we have that burst like to a full-on parabolic high. Once again, we have limited amount of like data points, but it's looking very likely like that's what we're going to get. And, coming into basically the summer, we could have a couple months of sideways to down action and then a few months of like parabolic price action top out around like Christmas, New Year's, whatever. And then, see the end of the cycle, and it's going to line up perfectly with like the 4-year halving cycle. So I think that that's looking more and more likely. And the more people that talk about it, the more likely it is to come true, because it's like self-fulfilling prophecy. So, but I mean, this futures chart has worked out perfectly. We came down to the buy zone, from our sell zone up here to the buy zone, found perfect support on the exponential. We wicked down perfectly to the simple moving average as well. You can't really be mad at that. It's basically perfect. But if we look at it on the daily, this thing has not been able to get above the 8 moving average. So if you figure from when we got that 821 cross back here, we basically failed to get it back above. We got above the 8, but we couldn't cross them back over. We have not gotten back above the 8 moving average. If we get a close above on the futures chart, 38,300, I definitely think we would just get a single big thick green candle like that takes us straight back up to like 43,300. I 100% think that will happen. But I mean, does that just further say like what I was getting at? That we basically have like this is our left shoulder, this is our neckline, this is our head, this is our neckline again, like almost perfectly down here based on wicks or closes, depending how you look at it. But, we basically have that neckline again. We get a push back up here, retest the 21, retest the parabolic SAR, get rejected at like somewhere around like 43 to 45,000, maybe even get a bigger wick than that, like as everybody gets bullish again. And then we just dump on their faces and basically put in that right shoulder. So we got our left shoulder, we got our head, we got our right shoulder, and then basically measure, move, breakdown from there. What was that going to work out to? Another 50%? That's a lot of pain. We do have, quite a bit of consolidation after that sell-off. Few green histograms in a row. Looks like we're getting ready to cross this 821 back to the upside. So again, I think there's a high likelihood we're going to get a nice move back to the upside. So maybe that shitty bitty is our next trade. A nice little 20%. But honestly, I'll probably just play altcoins on this one, because I think that people are still ridiculously bullish on altcoins. So if Bitcoin, I'll probably trade the Bitcoin chart, but instead of moving into more Bitcoin, I'll just move into more shitcoins. Honestly, that's how I look at it. So, but looking at longer time frames is when this really starts to look nasty as fuck. Weekly chart, we have the divergence signal, the sell by sell in the bullish control zone, at which point in time Bitcoin took a dump on your face. A bunch of red histograms in a row, completely lost the slope line, found literally like no support. We got a rejection candle right here. Do we get continuation? Where is that going to take us to? Attempt to stop this 821 cross. I mean, we remember what happened. We got the 821 cross back here at 8,000, and then we went up to 64,000. So if we get the 821 cross to the downside here, I mean, this thing could capitulate. We could very, very easily see the retest of the 89. That's 25,000. I think more likely than not, we get a big nasty wick that makes people like, pull the trigger literally and metaphorically on the sell orders, which would take us down easily to like that 20 to 18,000 range. And that's going to line up perfectly with that head and shoulders target. And if you look at this on the weekly, that really looks like a left shoulder, a head, and then like this would be coming right up for that right shoulder and then just coming back down, retesting the neckline. And I mean, that's what markets topping out looks like. Now, again, I still think this could be that double dip, that double bull market. But do you remember when people were talking about the Bitcoin super cycle? And I was like, how about no, Scott? This time's different. Bitcoin super cycle. Yay. Bitcoin's going to a zillion, trillion, cadillion. Hooray. Because fundamentals. The monthly chart, again, looks rough, man. We left the bullish control zone. We're getting ready to get the 821 cross to the downside. 2 months now, that's one red histogram. And now we've started off with a second red histogram. The only thing that would make this look juicier if you're a bear is a rejection wick to the upside and then a close below the 8 and then us wicking back down, or a big thick sell-off that takes out the parabolic SAR back here at 30,000. I mean, there's so little on this chart right here. It's hard to look at this and say this looks bullish. We just like destroyed, 1 to 2 bullish candles. And if ever there was a topping pattern looking on a chart, I would say this is it. So it's very, very hard for me to get long-term bullish on crypto right now. But we don't have to get long-term bullish on crypto right now. We don't have to. There's a million other things we can get long-term bullish on. It's okay if crypto falls out of bed, hits its head, gets a concussion, bleeds out, and can't find its little, what were those little necklaces that old people wear and they hit the button and it calls for help? Oh man, I can't remember. I've fallen and I can't get up. That's like crypto chart right now, is the I've fallen and I can't get up lady. So Ethereum, Ethereum looks likely to get this 821 cross on the daily back to the upside. We got the hard buy signal. I think this thing could very easily come back up here and put in a new high. Definitely a possibility. I think fundamentally and technically, people are like extremely bullish on Ethereum. I'm less bullish. I'm not convinced that proof of stake is going to be great. I'm not convinced that it's going to come out when people think it's going to come out. I'm not convinced that, we should have a robot in charge of the future of finance, aka Vitalik Buterin. But we'll see. We'll see. This looks like the candle pattern here. We got a powerful uptrend. We top out, sell off, get an attempt to a lower high, and then massive dump. Massive dump, it gets bought up, and then we can't get back above it. And then next thing you know, we're at the 89. Parabolic uptrend, sell back off pretty violently, get a push back up here. If this tops out at a lower high, then we're just going to get one of these big, thick red boys right here, all up in your face, old Kathy Wood style. And then after that, we cross 821 to the downside. We retest the previous all-time high at $1,300, which lines up perfectly with like the 50-55 back here. I mean, I think that's very likely. I think there's a high likelihood we see Ethereum push back up to like 3,400 and then very shortly after back down at like 1,400. Again, divergent signal on the weekly, hard sell, hard buy, hard sell, exit the bullish control zone, multiple red histograms in a row. Look, guys, I mean, yeah. Look, the truth's in the technical analysis. You either believe in it or you don't. You either believe in Santa Claus or you don't. You either believe in unicorns or you don't. So, I mean, the technicals on crypto just look like crap right now. And that's the only way you can really put it. If we look at the monthly on Ethereum, it does not look nearly as bad. It just looks like a big boy indecision candle. And then we're just hanging out at the top of the trend. So I would say overall, Bitcoin looks much worse for topping out than Ethereum does. And maybe something crazy happens. Maybe Bitcoin goes sideways to down for 6 months and Ethereum goes parabolic and we hit our $10,000 target. But we're about to lose the bullish control zone. We're about to get the 821 cross shortly after that on the monthly. I'm not going to be stuck holding the bag on this bad boy. Most of my Ethereum is gone. But, I mean, you guys know that, obviously. That doggy Dogecoin. Okay, let's talk about this one. I feel like I got a little lazy on old doggy coin and didn't actually share what I was looking at on this. I feel like we talked about it where we basically went like sideways for a while and then got the breakout, where we went sideways for a while and then got the breakout. But I don't think I ever actually drew it on the stream. I think I drew it on my trading computer. I mean, I know I drew it on my trading computer, but I don't think I actually drew it in stream. But essentially this was the same thing. We had essentially, matter of fact, let me go down to the 4 hour because that's what I was looking at. Let's turn off well, look, we got the 821 cross right here and then basically a nice powerful move up. But on the 4 hour, this was basically what I was looking at. We had a very clear, excuse me. We had a very clear resistance, in play. And, essentially what I was expecting is Oh, matter of fact, you know what I did? I could just look at my other computer, but instead, it was a channel, parallel channel. So yeah, or descending channel rather. So this is what I was looking at, was this channel right here. We had very clear interactions with the heart line and support, a bunch of wicks out of the bottom, but didn't break out of it. You know, found some support here again. We retested this. And then you guys know what I always say, the likelihood of breaking out of these things, when you break from the bottom to the top, it's very hard to break out of the top. When you come from the bottom to the top, or when you come from the top to the bottom, it's very hard to have enough momentum and enough like fuel in the tank to be able to break out of it. So most of the time what happens is you'll consolidate at the top of the range, retest like the heart line or a key support, and then you'll get the break. Here that failed. This looked like this was going to break out right here, but I don't know what happened, but let's just blame it on Elon. Let's say this was Elon's fault that it didn't break out. But this time Elon kept his damn mouth shut, and then we were able to basically find support and then get the breakout. And what do we expect the move for the breakout to be? And this is just absolutely beautiful. From the bottom of our channel to the top of our channel, measure move from the breakout point. I mean, we literally hit it to a T. You cannot be mad about that. I mean, it's absolutely phenomenally perfect. And then also, if we take our Fibonacci tool from the top of our pattern right here to our bottom, and this is a little subjective just because these wicks went different areas on different exchanges, but you know, we basically got topped out and got that hard rejection at the 0.5. Now, more than likely what happens here, you know, I think very clearly we were interacting with these fib levels. Clear interaction with the fib level, clear interaction with the fib level, clear interaction with the fib level, blah, 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 blah. And then, you know, break through the 382, stop at the 0.5. We consolidate here long enough. I think we make it to the 618, and then after that, the 786. So what was a beautiful trade. I should have put this one out there, but honestly, I don't even know. I really just didn't even think to put it out. But it is what it is. The best part about learning is that once you learn something and you see it happen enough times, it doesn't matter if you got that one trade in, as long as in the future you can recognize it and the likelihood of success. So Doggy Dogecoin still looking good, you know, to at least an internal retracement. I'm not overly bullish on it now, but the last time we got the hard buy, we got basically the hard buy, consolidation at a key level, and then continuation. Hard sell, continuation, hard buy. More than likely, I think we're back. I think there's still a good 50% for that Doggy Dogecoin in the cards here. And if there's one thing I've noticed, the meme stocks kind of like cycle around, like AMC, Doggy Dogecoin, and GameStop just like take turns pumping to like ridiculous levels. So while AMC outperformed Dogecoin, I mean, we can't be mad at the old dog. But let's be real, there's no new tricks coming out of Dogecoin. Litecoin, I haven't looked at this one in a while, and it was requested. I mean, in my opinion, Litecoin is, you know, basically like bird poo. You know, it falls on your shoulder. You kind of wipe it off. People tell you it's good luck, but nobody likes to get shit on. And, you know, based on what Charlie Lee did back in the old 2017 bull run, you know, he basically took a dump on everybody. The previous all-time high, we did get a new all-time high close this cycle. Based on wicks, we slightly got a new all-time high, but look, I never would want to get stuck holding the bag on this thing. Monthly, we've only got one red histogram. It's not quite like topping out levels, but there's just so many other things that I would rather trade than this. Even when we topped out here, we put in a bearish candle, but it wasn't even close to like a bearish engulfing. Here we put in a bearish engulfing and just got decimated afterwards. So after seeing this bearish engulfing candle come in, and it's basically like a gigantic indecision bearish engulfing candle, I mean, I think more likely than not, Litecoin could easily see a bounce back up to like that 280 range. Maybe it gains 50%, maybe it goes up $100, but I think this thing just gets absolutely crushed. In my opinion, and we're like sandwiched between the 200 exponential and 200 simple, and like fundamentally, this is like one of the worst coins ever. Yeah, I don't know. Or maybe it's just crypto silver. Whatever. It sucks. Polkadot starting to show some strength here. I do like this situation that's taking place. This was basically the 200 exponential was acting like that W pattern neckline. So we had a breakdown, a clear low here, that neckline, that tip of the W, that flying V, you know what I mean? That seagull pattern. We came down, we put in a higher low on our second V, and then here we got the break of it. So in all reality, if we take just from the close and we look at what our basic move back to the upside is, it's going to take us back to like that $30, $32 level. That's also a key resistance. So maybe we top out there. It's going to be tough for this thing to get back above. There's just so much overhead resistance because this went sideways for so long. It's just going to be so tough to get above these levels because so much price action took place here. I think we get back above. If we can get back to a new all-time high, this thing could run. But it's going to be tough to gain momentum for Polkadot above 32 bucks. I look at this thing as, an exit point anywhere around $32. I really do. As unfortunate as it is. MicroStrategy saw a little bit of a bullish move, but I mean, we got the hard buy coming out of the bullish control zone, a bunch of green histograms in a row. I mean, if you're going to bet on one person and their like honesty and like the overall quality of their stock, I think probably Michael Saylor is like the opposite of that person. So I'm good. Hard pass. How about no, Scott? This is a massively underperformer. We were looking at basically this pattern, but let's sort of reevaluate now that we have some more price action here and see what this really looks like. I think very clearly we could argue that was a high. That's a new high, or like lower high. So let's get rid of that and actually let's go full channel game. So let's put a channel in here and see if that looks a little more. See, I like that a little better. Now that we've seen price action develop a little more, I think that's pretty nice. We've got a high, we've got a low, a retest of the low. We have clear interactions on the heart line, support and resistance. We have, once again, a touch on the bottom, clear interactions with the heart line. And then we have our second point on top, interactions with the heart line, breakdown, nearly to the bottom right here. And then once again, interactions with the heart line. So is there some potential to the upside? Yeah, there's definitely potential for like another 30% move to the upside. There's definitely potential. But honestly, I think there's more potential probably for downside. And as long as we're operating inside this channel, there's just absolutely no way I'm going to get bullish on this thing. If we get a breakout of the channel or we start looking juicy, maybe. Let's look at our fib retracement and see how that looks. An internal fib retracement to like the 0.5. We could put a measure move in here. Just because Michael Saylor is a bum, scam artist, cult leader, doesn't mean that MicroStrategy, let's say it goes sideways here for a little bit, gets back to the top of the range, gets a push back up, runs in a hard resistance, and the 618 key fib level. I think 850 bucks could happen. I mean, look, that's a nice move, honestly. Like from where we're at now, a potential entry into MicroStrategy, 76% to the upside. I mean, there could be potential in this thing. There could be potential. I mean, I'm not going to take it, though. I'm not interested in it. But maybe somebody out there might. But not me. No, sir. Matter of fact, let's look at this weekly. And let's pull up our moving averages. And see what old Mikey Poo has going on. All right, so we got the 821 cross to the downside. We're bouncing the 55 exponential. Kind of got close to the 50 simple. We are in the bearish control zone for the first time since back here at like the capitulation lows. So you could argue that MicroStrategy looks absolutely horrible right now, and I would agree with you. Hard sell, hard buy, hard sell, divergence signal, took an absolute dump. There's nothing here for me right now. If we get back above the 821 and break out of that channel, like I said, back above the 821 and a nice break right here, I would like honestly, just so everything coming out of Michael Saylor isn't garbage, I would take the trade right there. I would take that trade. on a confirmed breakout and a cross back above the 821. But again, let's not get too excited. Let's wait and see what really happens, because I might be saying that right now because I'm in a good mood. But if you're going to bet on one person, I would rather bet on the horse that got in trouble for taking steroids after it was already caught and its likelihood of winning after it was already disqualified than on Michael Saylor. All right, I talked about it. Here it is, ladies and gentlemen. I think I may take a position on Coinbase. Matter of fact, I think I'm going to take a position on Coinbase. As crazy as it sounds, I know. Had a better opportunity already, and I did pass on it. But we're seeing a little bit of actual confirmation from Coinbase that it may be putting in at least a temporary bottom. I like that we put in a low here, a higher low, and now a third low here. I like that we're back above the 8, for what amounts to like the first time ever. I would really like to see it burst above like the 255 level. But I think this thing has adequately sold off. We got a bunch of green days in a row. We've got bearish control zone, hard buy signal. I mean, I like it. It looks good. Overall, I'm not bearish on Coinbase. I was just bearish on it with those evaluations at what amounted to me literally calling the exact top. I also like this little throw over right here, the breakdown of our little channel, that little fakey breaky, that little, oh no, it's going to die, psych. I like that because I think a lot of people probably capitulated here and then it got right back inside the channel. I think the likelihood of us getting this, a close above the 8 and then a move back to the top of the range, touching that 21, and then a breakout consolidation up to at least, I think the initial, and again, this may start out as a trade that sort of ends up more as a position, if that makes sense. I think I'm going to be looking at it initially as like a little 20-something percenter to the upside. Let's say 7.5% if we break down below the heart line with a 21+% to the upside, about a 3-to-1 risk reward. And then say like, potential after that up to the 618. But I think if we can break above this little like hard support right here where we topped out, I think we get up to at least the 618, potentially the 786, at which point in time, in all reality, the likelihood of us actually getting, back to like 786 or even like that little all-time high burst is pretty high. So, but I mean, the risk reward looks good on this. Overall, I like the idea of Coinbase because it's you can't argue that it's not growing nicely. It's a profitable company, which is a lot better than most things that are publicly traded right now. Most companies are like zombie companies. So it's making money. It's in an emerging market, like quote unquote emerging market crypto space. They make 95% of their money based off of fees, not based off of direction. So, volatility is more important to Coinbase's, making money than actual price direction. So we could see crypto go parabolic from here. Coinbase will do extremely well. We could see crypto dump massively from here. Coinbase will do extremely well. And we've already seen factually 100% that because of Coinbase's compliance with like the SEC, because of their longevity in like the crypto trading space, and because of their like security / potential to offer custody in the crypto space, that they are arguably the number one choice of like institutions. So while we've only seen some institutions so far flow into Coinbase, I think that we will probably see further institutions as they enter into the crypto space using Coinbase as their on-ramp and then also custody solution long-term. Those that choose to have like a custodian rather than, own your keys, etc. But, with a 3-to-1 risk reward, with a 4.6 risk reward, and with a 7% risk reward ratio, I'm pretty comfortable after that massive sell-off taking a position in this. So I know I said that you guys were going to laugh or whatever at my pick of the week. But honestly, for me, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. Your boy is going to grab some Coinbase up. I'm not going to go crazy. I'm not going to go overweight in Coinbase. I'm not going to like flip out of other things into Coinbase. But I am going to deploy a decent position in Coinbase this week. So Coinbase is going to be one of my picks of the week this week. And let me know how you feel about that in chat. Let me know if I'm crazy. And this is a perfect example, like I said, of me talking trash about something and telling it how it is. And look, when the chart starts flipping and the technicals look good and the fundamentals look good, I'm going to tell you guys, first off and foremost, I'm going to tell you the truth. And the truth is, I can build more of a case bullishly for Coinbase at this point in time than I can bearishly. I like the Fibonacci extension dumps. I like the strong pullback. I like the 50% devaluation from that ridiculous like parabolic bump. And I told you from the start, before Coinbase even got its public listing or direct listing, I told you I like Coinbase at like $200, $250. We're at $240 now. Nothing has changed. We saw like quite a bit of capitulation through here. I'm going with Coinbase, ladies and gentlemen. Your boy is picking up some of that Coinbase. I still hate Coinbase. I still think they're a total piece of trash and that there's no excuse for them to go down during like highly volatile times, especially with how much money they've made. But, well, I don't have to butt it because I just told you my argument bullishly for Coinbase. So I'm going to jump over in chat and then we will finish up with our technology. Finish with that tech sector. Tech. Cryptos. Adam. Oh, what's up, Adam? There you go. Life alert. That's it. My man, Adam. Yes. See, if you didn't have that 1978, I wonder how you knew that. Because I know the new kids don't know about that life alert. But you could hardly watch like TV back in the day without seeing them life alert commercials. God, it was so bad though, because you want to like, well, no, it's not that I wanted to laugh at them. I did laugh at them because they were like hilarious. But at the same time, it's like not a subject you should laugh at. It's like, oh, old people falling and dying because there's no one around to help them. But the commercials were just so damn funny. And that's the best slogan ever. I've fallen and I can't get up. I feel like that's MicroStrategy's like slogan. We're falling and we can't get up. Ray B, what's up, brother? Bitcoin dominance looks like it had a dead cat bounce. So maybe you're right. The alts perform while Bitcoin goes sideways. Yeah, you know what? Look, let me tell you guys the truth about something, okay? This is confession time. Crypto Trend Trader spills the beans live. The truth is, I barely ever reboot my computers. I'm horrible. And I think part of it has to do with the ridiculous amount of stocks and cryptos and technical analysis that I look at. And, I went ahead and pulled the trigger on some updates this week and rebooted my computer. And when I rebooted, I didn't load up all my charts. So I don't have the Bitcoin dominance and the Ethereum to Bitcoin ratio pulled up. So I feel like I could be honest with you guys, man. And I appreciate y'all listening. So thank you. It's nice to have trusted friends and, family here on the internet that I can publicly spill the beans to. So I appreciate you guys. And in the future, I'm going to try to be better. I'm going to try to reboot my computer more often. I'm going to try to have respect for the RAMs. But you know what? I overbuilt my computer so I don't have to reboot it. That's the whole point, right? I think. All right, let's check out that bitty critty D. BitConnect. Oh man, I wish BitConnect would come back. Are we in a bull run or what? I never hear anyone talking about BitConnect. Is that thing gonna go parabolic or what, guys? Is BitConnect making a comeback? Does anyone even remember BitConnect? Am I the only one? Am I the last of the BitConnectors? BitConnect. I think we should bring it back. Can you still get BitConnect or has it been delisted? Did BitConnect go to zero? Siri, is BitConnect still exist? Did all the cult members drink the Kool-Aid? We should take a vote. What's the next BitConnect going to be? Is it going to be XRP? Is it going to be Dash? Is it going to be something I've never even heard of? Do you guys think Cumrocket will be the next BitConnect? Will it be Dogecoin? Bitcoin dominance. Yeah, it definitely looks like. I mean, here's the real question though. This is what I see when I'm looking at this bad boy. We basically overshot that 786 and then got a bounce and got rejected off the 618 like perfectly right here. Which I guess we could probably get rid of this. We don't really need that anymore. So we basically got rejected perfectly at that 618. So the real question is, are we going to find support now at the higher low and grind out a bottom? Because I think that's probably likely. I mean, it's definitely a dead cat bounce after a shitload of selling. I never look at this on the daily. It looks so much better on the weekly. It's just more relevant. But yeah, I mean, it definitely looks like a 5-wave, like perfect. And then an ABC, like death rattle. But look at this. I mean, this is what makes me think it's bottoming and potentially just going to put in a higher low bottom right here. We have a massive, bearish control zone, hard buy signal, and a nice bump after that. The previous one, nice bump after that. The previous one, nice bump after that. Even this one back here, nice bump after that before continuation of the downside. So I think we're likely to get a nice bump coming out of that bearish control zone with the hard buy on the weekly. But we have 0 green histograms here. So maybe it takes 2 weeks and grinds out a bottom, and then we see further move to the upside. But I have a feeling we'll make it at least back up to the 0.5. I think Bitcoin dominance will see at least 50% that move back up. But, we'll see. Maybe it doesn't. We'll see, though. I mean, that's our initial fib. Let's look at what the internal would look like. Let's say that was the bottom and we already grinded it out, or ground it out. Let's say we already ground. Let's say that ground beef is in and we're just gonna make some sausage to the upside here. I would say probably 54. I think it's realistic to think we get up in this range and top it out, and that we have at least put in a bottom for now. But that's the area I'd probably be looking for before I start saying we're just going to grind lower. I think it's going to be tough to get lower than we're at right now. Now, there isn't any actual bearish divergence, though. We have a low and we have a slightly lower low. So I could be wrong, but I think more likely than not, we grind out this level and then we see more of a move to the upside. But, we could kind of look at this as, can we get some kind of like channel action out of this bad boy? I don't know. That's rough. There's not a lot to work with. Yeah, I don't know. There's not a lot of... Yeah, I think I would have to almost ignore this top right here and then just pay attention to... Let's look at how this looks on the daily if it looks like we got a breakout. See, I think more realistically, we'd be looking at like something like this, where we have a pretty consistent like resistance, like a fake breakdown out of it on the bottom here, push back up resistance, breakout to the upside, retest to the top of the channel, and then a like little bounce off of that, retest the top of the channel and the key fib level, and then we see the continuation to the upside. More than likely though, this move is probably just the channel. If I had to guess, just looking at it, yeah, just eyeballing it, it's like the perfect, it's like the measured move of the channel. So we probably got the measured move of the channel, a breakdown, found support at the resistance, previous resistance, flip support, got like a little dead cat bounce, and then like now we're just looking to grind out the bottom. But I think more likely than not, we're going to get that continuation to the upside, and that we'll actually see, like again, short term, we could see this just kind of grinding out here. Maybe Bitcoin has a push up, but alts have more of a push up, and some of the weak alts don't move at all. But I think realistically, Bitcoin dominance has probably bottomed. And if I'm wrong, God, these altcoins are going to roar. Because if maybe we get a double bottom here, So I wouldn't rule it out, but typically if we break through the 886, we're going to keep going. So there is a high likelihood, I think, that if we break down from this level, if we can't get above this 618 and at least get up here, I think altcoins are going to roar. And maybe that lines up with like 6 months of kind of sideways action. Couple altcoins keep pushing up. Bitcoin dominance kind of just goes sideways, maybe floats up a little bit. And then like end of the year, we get that parabolic rally. Bitcoin goes up to 75, 100,000, $250,000, $333,000 Bitcoins for everyone. Maybe. And then altcoins just roar. Cum rocket shoots to outer space. Dogecoin goes to $1,000. I mean, the whole world catches fire and just melts in a giant volcano. We get hit by asteroids. Dinosaurs break out of the ocean. Like full-on Godzilla status. But, I mean, hey, if we're all rich, who cares? We'll throw in on a rocket and go live on Mars. Or maybe the moon. I don't know if I'm ready for a Mars trip. If the world's going to blow up and be destroyed, I want to be close enough to see it. So I would rather live in like one of the satellites orbiting the Earth, or maybe like one of the little one of the little settlements they're building on the moon. And if they're not building settlements secretly on the moon right now, could we seriously like get our game up? Like, what are we even doing right now, guys? Lazy fuckers. I think we should all get to like vote what our tax dollars get spent on. If people were like, what would you rather? Do you want to help all the poor people with universal basic income, or would you rather throw in on colonizing the moon? I'm going with colonizing the moon, honestly. Like, not that I don't like people, but I think probably we should do a little colony action. So, or if they were like, it doesn't even have to be like UBI. Like, I'm still cool with all the programs for like people that need it and everything. There should be like minimum, whatever, universal basic income. That's fine. I'm okay with that. But could we at least do like, instead of like war with other people, can I just throw in on colonizing the moon? Like, there's got to be better stuff. I think we should try it. Let's everybody write a letter to our congressman and see if well, most of you guys don't even live in the United States. So let's start our own group, like the colonization of the moon by random investors throughout the world. I think we could do a GoFundMe to colonize the moon. How much you think we need? Probably like, depending how high Bitcoin goes, guys, I might be able to just pay for it at the end of this run. We'll see. It all depends on the cannabis stocks, honestly. All right, let's jump over here. This is more of like a happy rant about colonizing the moon. It's like a different kind of rant. So let's go to Tesla. Man, Tesla is like shit in the bed again. What is going on, Tesla? Can you grow a set? I really want to see like some kind of strength come out of Tesla. We come down here, we put in a low, we get a weak little bounce, higher low, and then we get our move to the top of the range. Perfect. So maybe we're just going to do the same thing again. Come down here, pathetic little sell-off, we get our move back up. But, honestly, I can't get bullish on Tesla. We talked about this, though. We talked about down here, we expected the move up to like $700. But it's going to be tough to get above $700, man. I almost think like Elon has like tweeted himself out. So I don't know. I'll have to Google and see if like Elon's been tweeting about stuff lately. Maybe he's just like saving up all his tweet power for like one big tweet, and we're going to get like some awesome Elon tweet. I kind of hope so. Not hearing about Elon's tweets lately, it's kind of boring. But he might be worried about like real companies and stuff that maybe aren't doing quite as well as they should be. But I don't know. Look, this is still a bearish pattern, and the Nasdaq is like strong and Tesla's weak. So it's like all the underperformers in tech are like doing well right now, and like the overperformers are doing less well. They're doing more goodlier. But coming out of the bearish control zone, we got the hard buy, got a nice little move, bunch of green histograms in a row, saved the blue slope right here. I mean, it's hard not to get bullish on this thing for some kind of move back to the upside. I don't think now there's much. I mean, 14% though. I don't know. If we come back down to the bottom of the range, I'm not sure there's a legit like risk reward ratio out of this area, but we could check it out. We could take a look at Tesla. I mean, this could end up a nice position, but the risk reward's just really not there where we're at. I guess if we saw a little further of a pullback and we could get something like a little juicy, if we could get some of that juicy fruit out of like maybe something like this, like a 6% stop loss or something like that with like a 20% upside, get a little buy-in down here at like 580. I think it could look a little juicier if we got a little move like this, because then we're already positioned really nicely for the breakout, which I'm not sure is going to happen, honestly. I'm still not ready to get like bullish on Tesla, because we could easily break back down and get a retest of this resistance. Here, I could have got so much more bullish on this if we got the initial move and the retest right here and then bounced it. But because we took so long to get down here, the retest, we hit the level we wanted, the breakdown, but we hit it over here, so we didn't get our retest of resistance as support. So maybe we get a second retest, it kind of sells off, and we get it down here. That's a real nice looking trade. But I don't know. I want to see this grind something out, and like, I really think the Tesla trade is like going to be good, but not anytime soon. But again, we'll see. There's just so many other things right now that look better. Pinterest looks like it's finding that 821 cross support right here, back above the 200 exponential and simple. It looks pretty good, honestly. It looks like we're in the bullish control zone now. So maybe we see a situation like this where we get like rejected off the heart line. But if we come down and we put in a higher low this time, and we can save this slope line, keep it blue. The last two times we did it, it failed right here. It failed right here. If we can get a nice consolidation sell off, and find support, I will probably take another long on Pinterest for that upside. Like somewhere off of like this range to come back up here and retest this. I mean, there's definitely a trade in there. I mean, I'm not going to run a stop like this, but as long as we put in a higher low, you're looking at like a 10% risk downside and 32% upside. So talking about like a 3-to-1. I mean, there's definitely another trade to be had here. So we'll see how this develops. I'm definitely seeing some real potential in tech in some of these like that have just been looking like dookie for a while. How does this look? About the same. PayPal, it's another one of those descending triangles, which like, statistically are bearish. So, tough to take a trade at the top of the range on a bearish pattern, but you could argue that we're breaking out here. If we grind this out for a little while, get like a bullish reset on some of the indicator oscillators again, I'd be looking to reposition in this. But we got to be careful we don't just get rejected off the 0.5 and we have a 618 and then a 0.5 rejection. Sell back off. I really think the tech sector direction is going to be down. eBay looks good. eBay is like the opposite of all this stuff. eBay is putting in an ascending triangle. It looks like the overall tech sector, like Nasdaq ETF looks. It looks much, much better than a lot of these other ones. And again, things like Amazon and eBay, like I don't think are just going to like, people are going to stop buying off of them because now, the reopening trade. I really don't. You could argue off the wicks, that we have basically like a perfect cookie cutter ascending triangle. Got a nice move back up to the top of the range. Hard buy is up a little high here. I don't really like to take them that high up, but the last time we got one up off that level, massive continuation. This one was a fake out though. Massive continuation. The next one was a fake out though. Massive continuation. And then is this one going to be a fake out? I mean, it was the last two times in a row. So do we break out right here? I doubt it. I think this tops out at that 65 range. We come down here and fill out this pattern. But honestly, I think the next touch of this range, I'm looking for a buy. I'd run conservative stop loss, maybe something like I'd hate to run like a 7.5% stop loss. I think you could run a pretty conservative stop loss down here, or I could, because obviously none of you guys listen to me. You're just here because I'm entertaining. I think this is a pretty juicy trade, 3-to-1. And then as we fill out this pattern more, as we get closer to like this range, like a 66 to 75% of the pattern, I think we're more than likely going to break out from there. And then this, I mean, the breakout on this is going to be big and thick. That big gains. It's not that big. Let's not get too excited, but I mean, what are we really looking at? I mean, let's say from the breakout, depending, I guess realistically we could just put a second target in place, but that's another 21% to the upside. And again, like long term, I'm massively bullish on eBay. I'm massively bullish on like pretty much all this stuff. Especially a lot of the Chinese stuff as well. Baidu, Tencent. I mean, we'll get into all that in a second. Alibaba. But, you know, that really is juicy because that's a 3% risk with a 31% upside. So, in all reality, that's a 10 to 1er. So, there's some serious potential on eBay. Serious potential. Etsy is next. Etsy, you know, this is one of the ones where we already hit our measure move, but we did tag the 236. And you can see looking back, like obviously we didn't know this was going to be the potential top until we got there. But you can see like very clear interactions with each of these fib levels. So very often when you see this, after it develops, that really will be the top of the trend. So after that descending triangle, which is what I'm expecting from most of these descending triangles, that measure move breakdown, we broke down perfectly to the 236. Do we come back up, retest, fail to get back above it, or poke back above it and then just sell back off? I think that's very high likelihood. And now, does this just turn into a channel now that we have a little more price action developed here? I mean, probably, honestly. It looks like it's probably going to be, you know, something like that. Maybe we go off the wick and we can get something a little prettier. So pretty. I messed it up, guys. You had it and you blew it. There we go. I mean, that looks pretty juicy right there. So do we get the test back up here and then we find resistance at that breakdown level and then we get continuation down here to like the 382 or something like that? I think we probably do, honestly. Let's put a little box in here for our potential rejection area. And then let's see if we get down here to like somewhere in the longer time frame, like lower range, maybe, and get our 382 somewhere down here. Yeah, I don't love Etsy right here. It looked good right here, but honestly, I'm not going to buy after, what is that, like a 7 or 10% candle? I think that was like a over 7% move. If I would have honestly noticed this, yeah, 7%. If I would have noticed the hard buy on all the green histograms here after a nice little pullback and still all green histograms, I would have taken that, honestly. Of course, in hindsight, it's easy to say, but I'm not going to take it now. I think the majority of that trade's done with. I would rather see it get rejected and try to buy it lower or wait and see if it consolidates for like a breakout. Because if we can get back up to the top of the channel and we can get a breakout and get a little bullish price action, where does that put us at? That's right back at all-time highs. So I think that's really the trade. I'd rather take a breakout confirmed on this after we consolidate above that level, or I would rather take an entry off of like the key fib and like a lower level, which, you know, ideally the 382 would look juicy. I mean, that would be the juiciest of juice. I mean, 50% to the upside with like 7 to the downside. And if we break down too heavy from the 382, I'd really be looking at the 0.5 to just get a better entry, or at least like take a larger position. I'd buy the dip. Something like that. Etsy. But again, that's one of those ones I think has potential. And here's a perfect example of what we were just talking about. The Zoom chart has just been filled out like a little bit more. It's just had a little more volatility, but you know, what's it been doing? Just oscillating inside that channel. So again, the breakout could look nice here, but we already got such a nice entry on Zoom, like perfect entry on Zoom, I should say. Front ran the 382 slightly, so maybe this ends up failing and we do get down here to at least the 382 or the 0.5. But again, I'm looking at that as a buying opportunity. I think short term though, there is a definite argument for there to be like there's definitely an argument for a continued sell-off in Zoom as things reopen, as like, even if long-term Zoom ends up still just crushing it, I think there's an argument that there's at least a short-term downside potential for Zoom, because it's hard to argue there's upside potential for Zoom from here short-term. Because more likely than not, what's going to happen is most people are going to go back to work. Some people are going to cancel their Zoom. Less people are going to be using Zoom. People are going to kind of get away from it, remember how much they enjoy working with people. And then long-term down the line, people are going to remember, wait a minute, I can still be productive on the road. I can still work from home. I don't want to deal with traffic. I don't want to deal with prices. Commercial real estate, starts going away. Like, there's definitely an argument for the future of Zoom long term, but I think short term, it's tough to argue bullishly. In my opinion, short term on Zoom, it really is. I think it's got more downside of all the tech sector. I think Zoom and probably Tesla have more potential. All right, so now here we are at my next two juicy looking potential trades. I've said Coinbase already. Talked about lithium and some of the other like metals, platinum, but Baidu and Alibaba are my next two. Again, bearish pattern, double bottom. I don't love that price action, but long-term trend-wise on Baidu, like we have this long-term trend since the bottom back here in March 2020. Very solid support. Went parabolic, bounced it once, bounced it twice. We're just kind of finding support at it, but I think if we can hang out here long enough, we're going to get a nice move to the upside. We also broke out of this very clear descending broadening wedge. We retested it perfect right here and then started to see like that sideways upwards movement. So I really think, I would have liked to gotten it slightly lower, but really what's the difference between 189 and 198? Like $9, like 4.5%. I really don't care, honestly. I think that there's enough of an argument. Hard buy coming out of the bearish control zone, all green histograms, flipped over the blue slope line below the zero. I really think, and we're about to enter the bullish control zone, I really think this thing's about to get a burst to the upside. I really like Baidu. So, our risk reward is like slightly worse. And you could argue I'll wait and see if it goes down a couple more percent. But I like it here. And there's still so much meat on the bone. Even if we said lower low and takes us out of the trade, it's 27% to the upside with 10% to the downside, just back to the 0.5. I mean, that's pretty juicy. That's pretty juicy. And now I feel more confident buying into strength after this just like pathetic kind of sideways action. I really like this more now than I did initially. And now you could argue that the measure move is going to stay there, or you could argue that now we got to take it off of here. Typically, I like to leave it off the breakout, but even with the pushback up to the 618, that's still a juicy trade. That's still a juicy trade. 36% to the upside, 11% to the downside, over 3-to-1 risk-reward ratio. I mean, so this is like the second to third trade I'll be taking this week. Again, I have not entered this one yet, but I am going to take this one. And then Baidu, Baba next. And, I like to always be diversifying into foreign markets as well. Like the FTSE looks good now. Chinese markets are looking better now. Japanese markets are looking better now. So many people just get caught up with one sector or, one country's markets. And I don't like to think like that. People a lot of times I think they have this like awesome diverse portfolio because they own different things. But then when you really break it down, you're like, wait a minute, like there's too much commonality between what you own. They're all cryptos, or they're all American stocks, or they're all commodities. Like that's not diversification. Like there's so many different ways you can diversify, like real estate, metals, traditional stocks, cryptos, foreign investments. Like there's so much And like so many of these things are directly correlated. It's like, are you really diversified? So Alibaba is next. Again, we see not only do we have this long-term trend line, this one goes back to 2018 here. And then if we really trace it back, we have this back to 2015. So we have a beautiful support trend line back to 2018. And 2 times in the past, we did something that we're doing right now, where we broke down. Again, we didn't have this back then, but now we very clearly do. But we broke down from it, found support, broke down from it, higher low, found support, and then came back down it, found support beautifully right here, found support slightly above, slightly above, slightly above, and then now here we found it perfect back there again, and now here and if we switch to a longer time frame too, some of these line up even better. Front ran it slightly, and now here we've been putting in like this bearish consolidation, but is it really a bearish consolidation, or is it just a giant 1 through like 5 wave structure? Here's our 1, our 2 retracement. Here's our 3, our 4 retracement, hit our target perfectly, which is the support of the 1, which this is beautiful support. We have support all through here. We have support here. We have support here. And then we have support here. And now we have it again right here. Like, that's some juicy support in my opinion. So poking down through that diagonal trend line doesn't look as bearish as people are like, I think, well, not people. I haven't even heard anybody talking about Alibaba, but I think people look at a break of support as bearish, but I don't think it necessarily is. I mean, we broke down from the 377 and the 528 right here, but we found support at key levels. I really like the 0.5 retracement of this structure as well, which is the Fibonacci from the bottom here to the top here, and we're perfectly at the 0.5. So is it possible we break down lower and go to the 618? It is, but I think it's less likely because of our 1 back here. And let's switch to a longer time frame and we can get a better idea as to what we're really looking at. I mean, this is a giant, beautiful structure. And we have a 821 cross here, followed by, I'm on the monthly right now, followed by a parabolic 150% move to the upside. Then we save the 821 cross right here, like basically twice, and then followed by another 100% move to the upside, 95% move to the upside. And now here, are we going to get the cross, or are we just going to save it? I mean, I think realistically we save it. Like, I think we really do. And this is the perfect buy zone off that 1. And then where does that take us to? You know, if we get another, let's say, just 100% move to the upside from where we're at right now, the 100% move takes us back to, or takes us up to $450. The 175 or 150% move is the 2.618 at like 171% at $600. I mean, I like this. That's a juicy trade. You know, 91% move or 191% move with a 16% drawdown. That's juicy. That's a juicy trade. Bunch of red histograms in a row. We are below the blue slope line. Hard sell signal, and Stokes are powerfully moving to the downside. So are we trying to pick the bottom on this one? Yeah, we really sort of are, which I don't usually like to do. But there is now flipping over to the weekly, and I'm going to turn off the moving averages. And let's look at, wait, no, the other way around. I'm going to turn off the drawing tools and look at the moving averages. This thing has, since our weekly populated, we have our 200 exponential and simple just cruising, and that lines up perfectly with like that diagonal trend line basically. So while we've technically broken down from the diagonal trend line, we basically just broke down to the moving averages. So we didn't quite get to them here. It was like perfect, you know, front ran them every other time. So are we just getting that move right now? Coming out of the bearish control zone potentially? Maybe we're jumping the gun a little bit on this one. Maybe no bearish divergence. But we're back at the 8. I mean, if we close this week at the 8, I mean, what's going to happen? We're going to move back up to the 21. So that's $230. You know, that's another 5% move. And then that starts looking even juicier. So there's definitely an argument to wait for a little more confirmation on Baidu. I think on Alibaba, I think Baidu offers a little more of an argument to take the trade now versus later. But I really like this one. I like the structure. I like the targets to the upside. So yeah, I think that's what I'm going with, honestly, this week. I'm gonna go with Coinbase. I'm gonna go with Alibaba, and I'm sorry, I'm gonna go with Coinbase, and I'm gonna go with Baidu for like my juicy trades, and then I think I'm gonna go with Alibaba for my like kind of juicy, a little aggressive entry moves. So yeah, there we go. That's a nice three solid trades in my opinion. But again, those are long game trades. I mean, Coinbase, Alibaba, and Baidu. If you ask me like three things I want to own 10 years from now, I think probably Coinbase, Alibaba, and Baidu are all they're all on that list. Now, what could happen in the next 3 to 6 months? Maybe we get some drawdown, but I don't know. I like them. Neo, I like Neo a lot. Again, this thing is juicy. We got a nice look. I mean, the truth on this one is it front ran the 236, and I missed this trade. I didn't get in Neo. I wish I would have took a trade down here at 31 bucks. I was looking for an entry at 30 or lower on a breakdown, but it is what it is. It's going to happen. Broke out of that resistance right there and hasn't looked back. If it looks back, I'll take an entry on support at like 35 bucks, 36 bucks, somewhere around here, but I'm not going to enter it now. But we did have the bearish control zone exit, hard buy signal at like 34 bucks. We did have a bunch of green histograms and the blue slope. We were below the zero, but above the slope line. Could have took a trade on this, but it is what it is. Definitely looks good though. But we could also, this could be one of the ones where we don't regret front running it, because there could still be a massive drawdown on this bad boy. So I'm not mad that I missed Neo, and honestly, it is what it is. But it does look good from here. For now, we'll have to see though. For now, on the longer time frames though, it looks bad. It really does. On the longer time frames, we got the 821 cross to the downside. We got back above it. If this starts closing above the 21 and the 8 crosses back above it, I will just re-enter at a higher price. And the truth is, what are we looking at? Potentially parabolic move to the upside. We're about to get the cross coming out of the bearish control zone. 2 weeks of histograms, green histograms in a row, and we're above all the moving averages. I mean, look, there's a good argument right now for an entry. But again, I would rather get the entry on like a retest at like 36, 35, 34. But do we get it? Maybe not. I'll buy into strength though, honestly. I like Neo long term because I don't think China wants Tesla coming in and just taking over. I think that, and the Chinese government, the CCP has a strong position, argument, like vested interest in Neo doing well. So we'll see. But again, it's not as juicy as some of the other ones are. We missed our entry by a couple bucks. It happens. We'll have to wait for another one or buy into strength later at a higher price. Completely fine to buy into strength. Apple, I think Apple still has more downside potential. We're well below the slope line. Bunch of reds in a row. We did get a green here. We did exit the bearish control zone. We did get a hard buy, but we lost a key level. This honestly could develop into a big Wyckoff pattern. The real question is it going to be like a consolidation and then distribution, or is it going to be a consolidation and it was accumulation taking place the whole time? But the truth is, I think we got plenty of time to see. And with big names coming out and saying, like, Apple got downgraded, ARK sold all their Apple, like, there's a strong argument that this is distribution taking place and we'll get a better entry into Apple. But I'm never going to be mad about picking up Apple. There is still a pretty nice gap back here too. On the daily back at like 96 bucks. So we could still see a big drawdown on Apple. We'll see. And we may see more of a pattern like this develop where we basically have like, a resistance up here. And again, it was just like a short-term channel breakout, measure move, sell off, lower high, continuation. And this just develops into like a big descending triangle. Something like that. But again, we'll have to see. I'm not rushing into this. But I do like Apple long term, honestly. Bumble, this is still crushing it. Congratulations to anyone who took last week's trade. Bumble finally quit stumbling. We hit our target. I mean, this was too juicy not to jump on. And what does this remind me of, honestly? It reminds me of what Coinbase looks like right now. I mean, Coinbase, bearish control zone, hard buy signal, like capitulation dump after this was the IPO. Coinbase was obviously a direct listing. Bunch of green histograms in a row. Hit a key fib level, almost a 236 Fibonacci extension. 4.236. We got the perfect buy on this bad boy. At $40, I think we took this trade, announced it and everything. So it's already up over 20%. It's big, thick, and juicy. And honestly, the truth is, $57 is our target. We could see a little resistance, some consolidation, selling back off here. But as long as we're just putting in higher lows right here, I still like this. I think honestly, we're going to start seeing some volume come in and this pick back up. Anybody that basically was bullish on it and got crushed through this is going to be looking to dollar cost average down or re-enter if they already capitulated when they dumped this thing. But I mean, beautiful trade. Congratulations to all the bumblebees out there. Squad up. AMC. I mean, guys, let's be real. AMC is a piece of shit. Movie theaters are going away. If you literally told me, like right now, you have to pick 10 years from now, 25 years from now, whatever, what is going to be more likely success in the world? Actual movie theaters or drive-in movie theaters? I would bet on the resurgence of drive-in movie theaters over regular movie theaters. Because the truth is, people want to be able to drink, smoke weed, and bang while they're watching movies. And I just don't see AMC allowing you to do those three things. And honestly, man, if I was going to pick one of those three things, I would say they're more likely to let you drink. But I think maybe if they brought back intermission, maybe that's all they need to do. Maybe AMC comes out and they say, look, we're going to bring back intermission in movies. Like, the movies are going to be 2 hours. An hour in, you go outside, you take your weed break, you go bong a couple beers in the lobby. You know what I mean? Go fog up the windows in the car. Maybe AMC comes back and I'm wrong. I think maybe that's it. I'm going to contact AMC and I'm going to let them know, look, I know what you need to do. I got the winning play for your game plan. But look, I mean, this is just ridiculous. I mean, new all-time highs. I mean, fundamentally and technically, like, there's just no argument to be had. Well, no, I lied. Technically, you could argue that the Fibonacci extension 1.236 from the previous all-time high to the all-time low is perfectly hit. So if we look at the all-time high from 2015, which is the last time AMC was 2015 and then double topped at 2016, and then it's been just in a capitulation downtrend since then. And what's better, double top or double bottom? I mean, after that, this thing has gone parabolic. Hit the 786, hit the previous all-time high, and then just broke out. It did 100% in a day to the 1.236. And look, guys, AMC looks like shit. I'm telling you. But you guys know my target. My target, once you take out the all-time high, is the 1.618. And the 1.618 is $217. So, I mean, I'm not going to buy AMC ever under any circumstances. But if it literally just went up 300% tomorrow after going up 100% today, I wouldn't, or no, I'm sorry, not 300%. If it went up 235% tomorrow after going up 100% today, I wouldn't even be surprised. Because that's just the world we live in. Meme stocks going up hundreds of percent in a day. That's the world we live in, guys. Okay? But I'm not. I'm too technically based. There's no way. I cannot participate in this. I would rather sleep at night and know that I made my money legitimately than buying into AMC after a 100% move in a day after issuing a ton of shares, which should be bearish because it dilutes shareholder value. And it's in a market that's literally dead or dying. I don't know. It's just crazy. But congratulations to any of the AMC warriors out there. I mean, hang on 1 second, because you deserve that slow clap. That's just crazy. GameStop. I mean, from when it topped out, guys, it got literally a perfect 50% retrace, and then it bounced the 886 perfectly, and then it bounced, you know, the 236, the blue 236 perfectly, and then, you know, put in a nice base right here, broke out of resistance. The measured move is the 886 again. So does it just end up as a high, lower high, lower high, and then sell back off? Maybe, but I mean, I don't know. Is it just the next? I mean, Dogecoin had a nice breakout. AMC had a beautiful breakout. So does GameStop just take its turn next in the cycle? Probably, honestly. Hard buy, back in the bullish control zone, multiple green histograms above the slope line. It's still red, but I mean, how long before this thing gets big and thick and juicy? And then in all reality, you know, again, I think GameStop is garbage, and there's no reason. I mean, malls are probably going to go away. Retail is probably going to go away. No one buys video games at GameStop. Anyone that's ever sold anything to GameStop probably would participate in like firebombing a GameStop, given the opportunity that they knew they weren't going to get in legal trouble. Because like, I think one time I bought a game for like 60 or 70 bucks from them, played it for like 2 days, and then it was like brand new, like just came out. Played it for like 2 days and beat it, and I was like, what a piece of shit game. I beat it in 2 days. Took it back, and they're like, we'll give you $8 for that. So, I mean, I don't know. But maybe that's why they're so sustainable. The 1.618 is $2,400 on GameStop. So, I don't know, guys. But, I mean, look at the GameStop move just blew through the 1.236. Let me go to a shorter time frame. Let's see if this is what AMC looks like right now. You know what I mean? From the previous all-time high. Wait, was that it? Let me go to the weekly. I need the middle ground. Okay. From the previous all-time high, the 1.236 on GameStop was $138. And the initial burst on GameStop weekly was the double top. So let's remember that. It was 100 and what did I say? The previous high was $62. So let's look at that and see if AMC is just, you know, and people say this is all retail. I don't believe for 1 second this is retail. It's too algorithmically like bot rhythmically like done. Yeah, look, the initial burst on GameStop from through that all-time high, or no, wait, it was 60. The initial burst from the all-time high here was the 1.236, like in a day, and then most of it sold off. The next day came back up and closed above it, and then right afterwards, what happened? It went parabolic the following day up to the 1.618. So if we look back at AMC, that's literally what we did right here. We came up to all-time high, went up. We just didn't get a strong rejection. Like GameStop got that strong rejection and then went parabolic back up to it and closed above it. And then immediately the next day went back to 1.618. So again, do we look at this tomorrow and AMC just did this? You know, something like that. I mean, like I said, I would not be surprised. It's a 10-to-1 risk-reward ratio with a 20% stop loss. It's not even 10-to-1. It's 12-to-1 because it's 250% to the upside, 20% to the downside. So you could argue that it's worth gambling on. I mean, I'm not interested in it. I like to gamble at casinos where there's attractive women and free booze and bright lights. But I mean, I wouldn't hate you for it. If this is being governed by bots and algorithms, market makers and booty takers, I think this thing could crush the shorts and easily see that parabolic move. But again, that's a technical argument to gamble on something. So I don't really like to do that, but it's up to you guys. So yeah, I think that's it for today though. We blew through the assets. That was a nice long stream. I've been kind of cutting them short lately. So that was a nice thorough 2.5 hours. We got 3 pretty nice, stocks that I'm looking at this week. or that I will be, I'm just not even looking at them, that I will be taking an entry on. So we'll look back at them next week and see how they look, how we did. And we will look back at our current ones as well. I'm probably going to be buying into strength some more on some of these cannabis stocks as well, because as they continue breaking through like key resistances or pulling back to key supports, I'm just going to keep moving into them, buying into strength. I really think it's the beginning of, a nice parabolic uptrend in pot stocks. I think they're just like lagging the commodity sector. So I'm going to jump over and chat and cut up with you guys for a little bit, and then I think we will call it there. So let's say Ether Connect is the thing. Believe it or not. Is it really? That's so funny. BitConnect. I love it. What's up, Commander Corn? Good to see you, brother. Unfortunately, in my opinion, Zoom is just the best of the worst. The best of the worst. My old lady does events and stuff, and what Zoom needs is some upgrades or competition for people to get excited. More fundamentals. Yeah, I totally agree, man. They're totally agree. But you could argue that Zoom was building something great and then was forced to just be like functional, and exponential growth just like swarmed into Zoom, and there was just nothing. There was nothing there. So I think in time, you're right. Will Zoom be like the Bitcoin of the future, where it's like the initial best, but eventually gets overtaken by something else? Maybe. I mean, I wouldn't be surprised, honestly, if down the line something better comes along. Or even just diversification. I think realistically, you could say with almost 100% certainty that Zoom will only lose market share from here on out. But that does not mean that the stock can't just go parabolic over the next decade. Commander Corn says, it would be dope if AMC did a GME and sold into these rallies to pivot into virtual reality or holosuits or something. Yeah, I totally agree, man. My idea of the day. It's safe to assume Commander Corn is invested in our pot stocks. Crack me up, bro. Good to see you, man. Appreciate you always being here and, chiming in the chat. Sean CZ says, malls, Mac have been pumping all week. Yeah, it's totally crazy, man. I mean, it is what it is, though. There's going to be malls, I think, in like big cities, tourist locations. But, I mean, the truth is, like, I mean, I can't speak for everywhere. I live in like a vacation spot. So I don't think our mall's going to like just go out of business. But we have like one other mall that closed down like 10 years ago that's basically just like completely vacant and will never open up again. And like we have so much dead retail here, like not even just from the pandemic, but just in general. See, Sean. So it's hard for me to get bullish on like retail locations, especially malls. And like my hometown, like where I like grew up basically, like the majority of my life, the main malls that we had like growing up have all closed down. Like there's still like one or two out of like 5 or 6. And like the other 4 or so malls have all gotten bought up by Amazon, and they're like all Amazon distribution centers now. So, I mean, stock wise, could they do well by getting bought out by Amazon? Yeah, maybe. But like the actual mall space and like retail and stuff like that, it just doesn't seem likely. But maybe I'm wrong. Maybe fundamentally malls will be where it's at. Maybe malls will be where it's at because retail dies, so it's forced to consolidate. So everybody buys like the majority of their stuff online, but everything consolidates into like those hotspots, which are basically just the malls, where you just have a bunch of retail jammed in one spot. And the only reason it can survive is because people make like a day out of it or a week out of like weekend out of it or something. I don't know. Again, thinking outside the box, like long term, maybe there's some potential there, but it's just real hard for me to look at. Like, I think it's more likely that like something like a Walmart or a Sam's Club branches out and starts carrying like having like those little stores in it, like the same way like you go to a Walmart now and they have like a Subway and a Starbucks and like an Auntie Anne pretzels. It makes more sense to me that we get like that what is it, Idiocracy? I don't know if you guys have ever seen that movie, but in like Idiocracy, like the future is just like, it's like Sam's Club. There's like one giant Sam's Club, and it's like a city, and it has all the retail stores in it, and then everywhere else, like everything's like dead. So I think that probably is the future. Now, how does that look really though? Is it like actually a mall, or is it like just like a gigantic retail chain? I think it's more likely that like, I mean, I think it's realistic to think that Amazon opens a retail like location eventually. You could like go to Amazon, you get there, you want to buy something, and they say, okay, great, it'll be here in 2 hours. Like, go walk around and do whatever. And then like drones fly your stuff, or maybe just trucks drive your stuff from the Amazon distribution centers to like that Amazon, like, shopping center, and it's ready for you like an hour or two later or whatever. I think that that has like legitimate potential for like what our future looks like. Or like I said, where you have those giant retail locations where it's basically just like a massive Walmart, and they just have like every store there, and that's just basically like the reinvented version of a mall. Instead of having just like a nameless mall or whatever, like this is our mall and there's a bunch of independent retailers in it. You have like one gigantic store that owns the property, and then inside of that, you basically have all the little stores. So I think those are probably the two most likely arguments for retail in the future. And I don't think retail will just completely go away. I think there's still nostalgia with walking around and buying stuff. There's definitely an argument to like wanting to go feel things in your hand or walk out with a product. But I think as supply chains become efficient, like Amazon, and they have distribution centers like all over the place, I think we're really going to see like Amazon retail locations where you go in there, and like I said, you go shop. Commander Corn says, could take a decade, but I can see retail re-entering these big spaces. If they've got robots and 3D printers in the back, customizing your stuff and building your pizzas. Yeah, for sure, man. For sure. And it could, like I said, it could come back as like one big, like, what do they call them? Like a staple store, like not Staples, the store, but like the Anchor store or whatever. Like your Macy's or your Dillard's or whatever, or your Walmart or your Sam's Club or your Amazon. And then you have like, all that stuff that used to be in the malls is just in this and it's really just reinventing retail. Because again, I don't think retail just goes away. I think as the supply chain becomes more efficient, and like you said, 3D printing, tons of stuff. I mean, how long before we're 3D printing clothes? Like we're already 3D printing like buildings. We're 3D printing like anything out of plastic. We're 3D printing stuff out of resin. I mean, how long till we're like 3D printing like, dishes in China and stuff like that out of like clay? How long before we're like 3D printing, and you pick what design you want and what style you want, and they just make it on the spot? Like before they're like 3D printing clothes out of like hemp fibers or like mycelium. Like I saw like they're making like shoe leather out of mycelium now. Well, why not making like leather coats? Why not making, whatever, like clothing on the spot? Like, I think you're really right, man. Shit, we'll probably be like 3D printing food soon. We'll just be eating like flavored paste. Sounds kind of like IKEA. Yeah, exactly, man. Exactly. And you could, take a bunch of pieces home and assemble it yourself, or they build it for you on the spot and you take it out of there. Or maybe you buy it and the drone delivers your stuff to your house, and like, you don't even, you go into the place, you put your hands on stuff, you feel the stuff, you decide what you want, you order it, and then the drone doesn't get dispatched to the Amazon shopping location. It gets dispatched like to the actual like your house location, and like a little helicopter like lands on your patio and delivers you like whatever you just bought. I mean, yeah, the future is bright, man. I think it looks awesome. Or maybe like you go to an Amazon retail location and you don't actually buy anything there. They just have tons and tons of stuff, and you just get to put your hands on it and pick it out. And then once you get home, instead of going like, because that's what people do now. Let's be real. People go to like Best Buy, and people go to clothing stores, and people go to retail like in general, pick out what they want, try it on, put their hands on it, look at it, and then they go home and buy it online because it's cheaper and they can get it in 1 hour or 24 hours or whatever. So how long before Amazon just says, look, we're the one they buy it from in the end. Why not build our marketing locations in person where people can come and touch and feel the goods, try stuff on, and then buy it from us? Because there's an argument to be made that that would like help Amazon exponentially have fewer returns. Because like one of Amazon's biggest like expenses right now is their returns. Because so much stuff just gets sent back. Same with like any online retailer. People buy tons of stuff online. They'll buy like 3 of the same thing. It comes in, they try it on, and they send back the other 2. And then technically like that goes into returns, and then has to be reprocessed, checked, can it be resold, put back into inventory, etc. So Amazon says, look, we can save a bunch of money by just having locations where you come, try it on, you pick it out, you check the quality in person, and then you buy it and we send it to you. And that decreases our returns by like 50% or 75% or whatever. Like there's a real argument to be made for like, you know, hands-on retail locations in the future. How does it develop? I don't know. Maybe we just thought of it on stream right now. Maybe they're already working on it. And we're going to see some of these ideas like come to fruition. Maybe they're going to come up with something way cooler than what I thought of. But I definitely think there's a future in it, guys. So, but yeah, hell yeah. I think we're going to cut it off there. Right around, what, 2 hours and 45 minutes. That's a nice solid stream. I could feel it wearing on my voice a little bit. I think 3 hours is a pretty solid time for us for like the longer ones. And then keeping around 1 hour for like the shorter ones. So. And I think if I can do like a 3 hour, a 2 hour, and a 1 hour, I'll start doing 3 streams a week. And I've also been considering, I've gotten a lot of requests for like a once a week, 15-minute analysis on just one asset. So maybe I'll start doing like a weekly or monthly analysis on like a single asset, like Bitcoin or a single stock, or like gold or something like that. And it'll just be like a 15-minute in-depth dive only on that single asset. And then I'll put out like, you know, a few of those every week. It's totally something I could squeeze in. Not a big deal. You know, as I'm just doing my own analysis, I just, you know, throw it out verbally, like make a video and then post it. I think a lot of people have been saying they would enjoy it. I agree with a lot of the recommendations or suggestions that would help with channel growth. I think a lot of people do want that short and to the point. And I think doing a longer term look at an asset, but only doing it once a week or once a month like that, really makes it much more viable and much more useful. Because I think part of the reason those videos don't hold up well is if I do like a short term video on a 4 hour or a daily time frame, it's only relevant for like a couple days and then it's outdated. But if I do a gold TA video that talks about, or silver or something like that, that talks about like where I think it'll be at in a week, where I think it'll be at in a month, where I think it'll be at in a year, that's so much more relevant for like days, weeks, months, or even years, that it will still gain like a lot of views. It'll still be relevant and useful to people, and it holds up better over time. So I think that's what I'm going to start doing. I have been slacking on the Friday streams, but there just hasn't been a ton of like relevant stuff. And then also like, you know, I've been getting out and about a little bit more, like with, you know, everything kind of opening back up. The weather's been absolutely phenomenal out here. It's like full on beach weather. So, you know, I've been out and about as well, you know, revisiting that lawn care as much as I hate it. But it is nice to get out there in the sun. It forces me to like reemerge into daylight after like the, you know, the dark winter, the dark 1 year winter. Let me jump back in chat here for a second. That'd be great for the channel. Yeah, a lot of people have recommended it, requested it, etc. I totally agree with you, Bubblies. Sean says, appreciate you taking the time. For sure, man. Appreciate all you turning in. Appreciate all the interactions in chat, too. I feel like most of you guys have said what's up. If you're out there in chat lurking right now, now's your last chance, man. Say what's up or whatever. Tell me where you're at. I don't care. You know, interact. I appreciate all the likes, shares. Definitely appreciate all you bros and lady bros. Discord and the course. Okay, yeah. Discord. This is what I should have done, and I didn't really think about it. I should have started the Discord group up at the beginning of this month, but I have just been so damn busy. So I think what I'm going to do is, you know, it's the beginning of the month now, and I do it monthly. So I think what I'm going to do is I think I'm going to start it in July. Typically June is a little less like exciting of a month anyway. And then also there's an argument for like going to the beach and like doing summer stuff as well. So I think I'm going to spend June figuring out who's going to join and giving people an opportunity and kind of getting the word out. And then I'm going to start the group on July, like the beginning of July. And then as far as the course goes, I have already done like basically like what I consider the outline or the structure of the first course, which will be free for everyone. So that's going to be like, it looks like I'm going to break it down into like 6 like courses, like one section, 6 different like videos or whatever, or 6 different like parts, however you want to say it, chapters, whatever. That's going to be free for everyone. And then I'm going to do a in-depth course, which will be free for Discord. And that's going to constantly be going on. And that will be free for Discord always. And then if you don't join Discord, but you want, you can purchase that course separately. So I think that covers all the bases. And then that way, like it'll basically be always growing. And there's always going to be a benefit for people to stay in the Discord group long term. And then also within the Discord group, I'll have the same as before, where there'll be like a general chat where anybody can talk about whatever there. And then there will be a specific section that will have like all the course material. That's again free for everyone in the group. And then a third section like I had before that's going to be trade setups. And that will literally just be, instead of just putting a ton of trade setups all the time in there, like I'll do my videos and everything still. I might do like some snippet, like little chart or whatever in there, but I'm going to have at least every week between like 1 and 3 trade setups, like entries, exits, stop losses, and like in-depth reasons why. And then we can keep up to date on that as well. So I think that's going to give like a nice amount of structure, but also flexibility. And then I think it covers all the bases because I don't see any reason for people to pay to be in a Discord group and then also pay for a course on the side. So I know there's people that don't want to be in a Discord group that might still want the course. I know there's people that will want to be in the Discord group that, you know, will obviously appreciate the course for free as well. And then I know there's people that don't want the Discord group, don't want to pay for anything, but can still at least get the basics so that they can be brought up to speed. Because I know there's a lot of people that are like new. I know my charts and the combination of moving averages, Fibonacci's, like all the indicators, the oscillators, like everything can be extremely overwhelming. And at this point in time, like the indicator series and like my basic like TA Fibonacci videos and stuff are just completely outdated. Like most of that stuff is like a year to like a year and a half old at this point in time. So I mean, I think I'm just going to redo, well, I know all that stuff will be covered in the initial free course that's for everyone. So, and then we'll go into like the details and then we can kind of go from there. You know, and then if something's working out better than I expected, I can put more time into that. If something's not working out as well as I expected, you know, we can siphon the energy somewhere else. But I think overall that pretty much covers all the bases. So, Ray B says maybe split it up. Cryptos, tech, commodities, one at a time. Yeah, I did the like 3 separate videos where I did crypto, tech, and commodities. And the truth was, it honestly just felt like I just divided the full stream amount of views into 3 separate videos. So while it might save you guys like a couple minutes not having to like speed through the live stream to get to like what you care about, it also sort of forces you to pay attention to different markets, which I think is healthy because I want people to diversify and not just be in crypto, not just be in stocks, not just be in precious metals. So while I force you to like make positive changes in your life, also, you know, it's not that big of a deal, I think, to like speed through the video to just get to what you care about. I think the way I have it separated up into like the 4 main parts of like the group is pretty beneficial. And I did not see, like literally if you say like my video gets 100 views, if it has everything, if I broke it up into 4 videos, I would just get like 30 views on each video. So it was like, there was really no benefit to it. It's basically just me like publishing 4 videos instead of 1. So, But I definitely appreciate the heads up, brother, or the recommendation, Ray. Thank you, my man. Commander Corn says, yeah, man, like your favorite trade of the week would be cool, or like to stay out of this bull trap. You know, one of us ought to be able to chop these up into 30-minute sections or something. Yeah, and that's another thing as well. You know, I understand not everybody's in the same financial situation. So one thing like that I had offered previously when I had the group was like, if you have some like cool skill or whatever, and you can make me like a new cool like thumbnail like for videos, or like, you know, something cool and flashy, like you got the skills and the time to do that shit, I'm totally cool, like, you know, bartering you know, group entry slash like contributions in exchange for your like computer skills. Or if somebody goes through and wants to do timestamps on the videos and save me the trouble, because I'm just not going to do it. It's too much extra work. I mean, I just don't have the time to go through and do it all. So if somebody wants to do something like that, if somebody else has like some other skills, like, or whatever, that they're willing to like, you know, contribute to the channel or whatever, I'm totally cool with that. I'm 100%. And even, I don't care, maybe you're a millionaire and you have mad computer skills and you like making thumbnails. By all means, man, I'm definitely down to work with the community. And I think that's really how we grow and everything. So I'm 100% for that, brother. And Bubbly says, where can we find your email? Okay, yeah. So if you're not familiar already, if you just go to the actual like channel homepage, and then you go over to, matter of fact, let me go look exactly so I can like literally walk you through it. If you go to the channel homepage, and then all the way on the right, like the last tab is about. I don't think there's anything here that would like. So if you go to this page right here, and then you go to the about page. Where's that? And then you go to view email addresses. You can click right there, and that's the email. So yeah, go check that out. And, you know, feel free to reach me there, contact me, whatever. And you can get a hold of me. And then, you know, just shoot me a message. Let me know that you're interested or whatever. If you want to tell me like a little bit of your background, like, hey, you know, this is how long I've been trading. These are the markets I'm interested in. I like your channel because of such and such, whatever. That's totally cool. And I will just like flag all those and get back to people like accordingly. But, you know, like I said, you pretty much got a month to do it. But you know, if you're serious about the group and you're going to be like positive contribution to the group, like I'm not trying to have like ridiculous arguments or people wasting my time in the Discord group. Like, it's literally for people that want to interact in a positive way, want to be part of the group. And again, I don't think it'll be a problem. I only had to kick out ever 2 people from the Discord group. And, you know, it was for various reasons. But, you know, it is what it is. I don't think it'll be an issue, but I'm not trying to have some shit show Discord group where like anybody can join and it's just a bunch of idiots like arguing about like race topics or whatever. Like I'm just not interested in that. So, but yeah, that's it for today, guys. Appreciate the recommendations, suggestions, comments, all that stuff. Feel free to reach out to me and I'll get back to you sometime in the next week or whatever. And we'll go from there. So there we have it, guys. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Crypto trend trader. And I'm out of here.